The first would be Sir John's 50% rule. So he never replaced an investment in his portfolio unless he could find one 50% better. And he told people the time to invest is when you have the money. But he said the average person is going to rationalize spending their money. So the best time for them to invest it is when they have it. 2, keep a wish list of securities in your desk drawer that you have chosen when your mind is rational. I do this. It works really well. This is the biggest tool in my toolkit. When markets fall, things get really scary. Pull out the list and go to work. There's a powerful psychological shift that happens when you do that. You quit focusing on the money you have lost and you start thinking about the returns you're going to reap because you're buying these incredible businesses that were not cheap enough to buy before the panic. It shifts the psychology. It shifts your mind. It is palpable. It's the most powerful tool I have. I kid you not. I suggest you all use it. Enter trades in the morning. You have less willpower as the day goes on. That has been proven. So if you need to lose weight, exercise in the morning. That's when I do it. Enter your trades in the morning. That's when you're thinking rationally. You have less willpower as the day goes on. Don't react to the market in the afternoon and enter trades. Make your rational decisions in the morning. Do your own research and be prepared to accommodate the sellers. It is your duty as a kind human being. If they need to sell their stocks, accommodate them. And I'll close with this. This is my favorite picture of my uncle ever. He's reading the Wall Street Journal at the North Pole. And I once asked him if you could have one piece of information to share with investors, one piece of advice, one word, what would it be? He said, patience. He lived in New York. He sold his business. They wouldn't buy this small component of his business called the Templeton Growth Fund. He was retired, so he just took it with him to the Bahamas. And that's when his career took off in his late 60s. But I one time asked him about managing money there, and I said, tell me about managing money in the Bahamas. And he said, well, actually, my returns got better when I started managing money here. And I said, well, why do you think that is? And he said, well, I think it's because I get the Wall Street Journal 3 days later than everybody else. And he was serious. You don't have to react right away. And one way to do that is to read old newspapers.
Hi, this is Cayden from VIA Value Investing Academy. Now, welcome to our March VIA gathering. Just now you will have watched a video produced by our own in-house team, which is Susie and Irfan, and of course, yay, own self, clap own self, right? Now, as you can see over here, the contents that we have produced are all located at this YouTube channel, which is our VIA YouTube channel called youtube.com/Value Investing Academy. And if you want to watch or learn more about investing, I'm going to put this slide over here for a couple of seconds. Please feel free to scan this QR code, right? And then when something pops up, you just need to click subscribe. Yep. And yeah, from my YouTube live, I could see there are about 92 people joining us. A couple of our grad, which is Manfred, Angeline, Alice, is already with us. Yep. So Angeline said that he has watched the Laura Templeton video for about fourth time. By the way, I've lost count of how many times I watched, but regardless of how many times I watch, the video is still pretty meaningful. Okay, good. So by the way, have you scanned already? Scan the QR code. When something pops up, just click subscribe, right? If I remember correctly, the number of subscribers that we have is about 4.1 thousand, I think so. So you may notice that in this slide, right, when I was trying to persuade people to subscribe to our channel, there's only about 2.81K. So I think for the past, I guess maybe 4-5 months, we have grown our subscribers from 2.81K to 4.1K. So all credit is given to Susie and Irfan, right? Yeah, who are now eating McDonald's fries while I'm working. But it's okay, huh? So you scan the QR code, right? And then when something pops up, just press subscribe. Okay, so let's get started. So welcome again. Yep, we have our good friend Ming Kiet, right? Yep, good evening. Now, just to let you know that today is the 14th of March and is our third monthly gathering for our graduates from our value investing program. Now, just to double check, maybe some interaction. We have about 109 or 112 people who are watching this. Can I just double confirm how many of you are our graduates and how many of you are not our graduates? You don't mind, can you just press under the chat, right? If you are our graduate, can you just type yes? If you are not our graduate, can you just press no? Not press no, like saying type in no, right? Yeah, so you just type yes and just type no. Yep, our grad, you just type yes, and not our grad, which is fine, right? Just type no. Okay, now whether you're our grad or non-grad, you're still welcome. And just to let you know that this VIA gathering, right, is intended to be strictly for our value investing graduates only. And this is the very first time, I think 12 years in history, that we open up our inner circle of talk, right, or gathering to members of the public. Also, I can see, great, yes, it's okay, just Victor, no, which is fine, right? You're still welcome, huh? Okay, just continue, right? Okay, Chin Yi, no, yeah, it's okay, just continue, type yes, no, depending on whether you're grad or not, huh? Now, in case you're not our graduate, it's okay, right? I just want to share with you what are our intention for this VIA gathering. Now, just to let you know that this gathering has been organized by us, right, as in VIA since June 2010. So we have been around for the past 12 years. And we do it without fail, rain or shine, whether I'm sick or not, we always do it. Yeah, the only 2 months that we don't really gather, right, is June and December. And of course, we all know that, because of this pandemic, we are gathering online. Yeah, so during the pre-pandemic, we always gather on site. As in our office over here, we can accommodate about maybe 100 people, right? Then sometimes the gathering numbers are so huge that even the space here, 100, is also not enough. So what we do is there's 100 people who gather on site, and then anything beyond 100, they will gather via our online conference. And in the early days, there's no such thing as YouTube Live or Zoom. So we really have to find some ways to come and meet. Yeah. So in general, our gathering usually there's about quite a couple of hundred. So as you can see over here, we have about 125, right? Now, so just to let you know that we have been doing this Monday meetup since June 2010, I say, and we have been around for the past 12 years. And just to let you know that we are a very small enterprise, we are part of the SME, right? And most SME, like 80% of SME, they don't survive 10 years or more. So we are quite lucky. So we belong to a 20% which have struggled, and then eventually we so-called survive more than 12 years. And the purpose of our VIA gathering, and we have been meeting since 2010 on a monthly basis, is really to provide lifelong learning for all our graduates. And as much as we can, we always come up with new topics. And some of the topics may include how to search for good investable companies, especially right now with the inflation and then with the Ukraine and Russia conflict, and we want to take advantage of this opportunity to find very good investable companies. And of course, when we invest using our hard-earned money, right, we want to make sure that we are able to evaluate companies to ensure that they're good before we invest in them. Yeah. And of course, the next one is we also talk about different valuation methods. Yeah, value investing is just one field, right? And then, Zen say you missed the in-person. Don't worry. I think one day we'll organize because I think with effect from tomorrow, right, which is 15th of March, I think the gathering can go up to 1,000 people. Yeah, 1,000 people. So as long as you are wearing masks, you don't really need to keep a 1 meter social distancing. So that's a good news. Maybe April or May, we will organize one inside one and see whether anybody come or not. Because it's been 2 years. And of course, the topic includes personal finance and any interesting topic that relates to money. Yeah, this is the interesting part. And of course, our speakers, our invited guests, right, will also share about some companies they are looking at. Yeah. And then today is quite interesting. Today we also have one of our very so-called new grad who has been with us for, I guess, one year plus or 2 years. He will share with us his investing journey. But of course, some of the good things that he has encountered and some of the bad learning lessons that you have. So these are the things that we have been doing. And I would suppose, right, in the entire Singapore, I think VIA is the only financial education company that has been following up with our graduates so consistently for 12 long years. 12 years is very long, 12 days is quite easy, right? 12 weeks is quite easy, but 12 years is a very long time, and we should be the only one that's doing this. So in case we have a number of people who say no, right, you are not our graduates, this is just to let you know that we really follow through, how should I say, we really a walk together with our graduates even after they finish the course. Okay, so this is the purpose of our VIA gathering, in case you're not very sure what it's all about, huh? And of course, our tagline is we simply care, right, to make everyone a better investor. So let's get started, right? Now, for our this month's gathering is quite interesting. Let me share with you what are the topics that we're going to talk about and who are our invited speakers. Now, the first speaker after my so-called introduction, right, is our good friend. His name is called Wicked. Now, Wicked has read a very interesting book, right, written by this guy called William J. O'Neill. So, by the way, this book is quite thick, huh? This book is quite thick, right? And the interesting thing about this book is I'm going to share. Can you see here? The Successful Investor. What 80 million people need to know. Singapore is only 5.5 million. And this William O'Neill is not just a writer, you know. He is both a stockbroker, he's a writer, and remember, he owns a stock brokerage firm, right, known as William O'Neill & Co. in 1963. And he also owned a newspaper. It's like owning SPH. And the newspaper is called Investors Business Daily. And he's really passionate about investing, right? So what's even more interesting is he has created one formula, right, which is called CAN-SLIM. CAN-SLIM is no, it sounds like two words, but actually it's an acronym. The C stands for something, A stands for something, N stands for something. So now, if you look at CAN-SLIM, right, this two words, it consists of a total of 7 alphabets. So each alphabet actually stands for a step to find a good company to invest. And the most interesting thing, right, about his method is he used both fundamental as well as technical analysis. So, you know, as value investors, we don't really look at candlestick, we don't really look at technical analysis, but this guy is quite interesting, huh? And Wicked has really put himself outside the comfort zone because Wicked is a value investor, and right now, you know, he volunteered, right, to read this book, and there's a component of fundamental and technical analysis. So later on, he's going to bring us through, right, what is this CAN-SLIM method, right, these 7 steps, yeah, so that eventually we can find good company using both the technical analysis as well as fundamental analysis. By the way, in case you are not our graduate, you realize that you are learning new things. This one at absolutely no cost. And these are what we have been doing for the past 12 years. Okay, huh? O'Neill, right? O'Neill. Okay, I think somebody is chatting with me. Right? Okay, good, huh? Now, then that is a Wicked, huh? Oh, and the objective of this CAN-SLIM method, right, is really to discover some interesting stocks before they make major price advances. And right now, during this period where there's about 11% drop of the S&P 500 since the most recent high, right, actually create buying opportunities for us. So I think by learning this CAN-SLIM method this evening is really a privilege. So that will be by Wicked. So that's the first speaker, right? Second speaker, right? Oh, after Wicked, there'll be a short break, huh? Then the second speaker is actually Fauzi. Fauzi is one of our graduates. And usually after our grads, so-called finish our class, right, sometimes we will go and bug them, say, hey, you know, share with us your journey and so on. So I realized that most value investors are quite reserved, quite shy. They don't want to talk about it. Yeah, so Fauzi has been encouraged, right, to really share his learning journey. So I really like to thank Fauzi. Because of all these years, Fauzi is the rare few, right, who really shared his investing journey. So that will be Fauzi. Then after Fauzi, we're going to have a break again, right? Then, of course, the third one is me. Can you see this photo over here? Yeah, so what I'm going to do is I'm going to share one company that's been like a talking point within our VIA closed group because the share price has plunged about 50%, 50%. So right now, the question is, what is this stock? And if you know this stock, is it still investable since the price has dropped by half or discounted by half, right? And I'll talk about this after Fauzi. So in summary, these are the things that we're going to cover. I've already done my intro, right? And I'm going to invite Wicked, then followed by a break. So this time around, quite interesting, I've got 2 toilet breaks because we have people from a non-grad, right? So I worried that the non-grad not so used to very long gatherings, so we better have more frequent break. So after Wicked will be a break, and then after the Fauzi, there'll be a break again. Then after that, I'll do a closing, right? By talking about a company that has where the share price has dropped 50%. Okay? So let's get started. You can see this picture, right? Rocket launch. Now, so I'm going to stop share and I will invite Wicked to come on board. So Wicked, are you there? Yeah.
Good. Yeah, I'm having some issue at my side now. My screens are actually sharing. Wait, I can't control my mouse now. Wait. Can I restart my computer for a while? Sorry. Yeah, sure. Sorry. me to share the screen again. Sorry for the delay. So basically, yeah. Thank you, Cayden, for introducing today's topic. Okay, so thank you, Cayden, for introducing the presentation for today. So today we'll touch on the successful investor for the second part. So this is William O'Neill, and basically what we'll be touching on today is actually more on technical analysis, which is actually what he shared in his book as well. So first we'll take a look at 5 basic chart patterns, and next we'll be taking a look at the Ken Slim system. So without further ado, charts itself is actually an add-on tool to allow us to make better decision when we are doing our investment. So here we will take a look at 5 basic chart patterns, which are namely the cup with a handle, saucer, double bottom, flat base, ascending base. So besides looking at the pattern itself, we should also take note of one particular portion, which is actually trading volume. So all this come hand in hand when we are trying to read the chart itself. So before we read a chart, what actually is a chart? What we'll be looking at later will be known as the candlestick graph. So it shows us how the price changes with the supply and demand of this underlying asset. So for our case, it will be the stocks that we'll be looking at. So this duration we can actually set to be 15 minutes, 1 hour, 4 hours, etc. And generally, the red candlestick refers to drop in price, and green refers to increase in price. So with this, we'll take a look at the individual candlestick. So we can take a look at the red stick itself. Since red stick means a drop in price, the open price will actually be higher than the close price. And the 2 wicks, so the 2 ends here, we call them wick, is actually the highest price and the lowest price respectively. So this is also the same for green stick, where green stick indicates an increase. So the open price is going to be lower than the close price. So first, we'll take a look at cup with handle. So for this pattern itself, we are observing the first point is that the stock is moving down within a period of 5 to 7 weeks to form the left side. And basically, it will move up on the right side to more than halfway of this pattern with an increase roughly around 10 to 15% of this pricing. Then it will move slightly sideways to actually form the handle. So as we mentioned just now, we should also couple this with the trade volume. So actually the trade volume in the lower part is actually declines or dries up to a very low level. And the best buying time is actually when the stock pricing movement actually breaks up from the earlier recorded peak price in the handle. So basically a correction from the absolute top to the formation of the absolute bottom is generally 25 to 40%. So I think here are all the words, and I think we will be better if we can actually visualize this cup with the handle patterns. So over here, we can take a look at an example of a graph. So basically this is the imaginary cup with a handle kind of patterns. So what we should observe for the first point is that the left side actually will be forming within the 5 to 7 weeks after hitting the resistance line, which is the highest price point. So it will actually form the left side. And after that, it will continue to move towards the lowest point over here, as what we can see. And this will be the first support. So if we observe this first support, they will actually bounce back and form the right side of the cup, as what we see here. But notice that it will not surpass the resistance line over here. And once it goes down, it doesn't fall below the first support that we mentioned just now. So over here is actually the second support. So support itself means that the price doesn't go any lower from this point onwards. So this is the portion where we can see the handle is forming. So it will continue to move up, and for the best buy price, it's actually on this portion here, which is where it's breaking up from the previous high resistance point. So this is the concept for the cup with the handle. So there is actually a reason for William O'Neill to devise this kind of pattern. So in this case, we take a look at one example that it actually highlighted in the book itself. So this is actually Reebok. It's actually looking at the daily chart, and what Reebok does is basically athletic shoes. So overall, there's this 14 weeks cup with a handle period. So this is the left side of the cup and right side of the cup with a 3 weeks handle. So we will take a look at the explanation here. So the first step to have this cup with a handle pattern form is that they have a 30% prior uptrend in terms of the price point. So it will hit an old high where it will form the resistance that we mentioned just now. So with this old high, it basically means that this story, it's already obvious to everyone. And the early buyers, referring to those that are actually buying the stock earlier, sells off to get the profit. So this caused the stock price to drop. And the expected decline is roughly around 15 to 30% from this old high, which is the resistance. So it will continue to fall until this point onwards, where we will notice that a company which is actually fulfilling the cancelling trades will have institutional investor to step in and support the stock. So what is the meaning of cancelling trades? We will actually touch on in the second portion of today's presentation. So what this basically means is that if the company is actually fundamentally good, and technically we notice that they have already reached to this first support point, the investors or the institutional investors in this case will start to support it, and we will come through this back to this old high, which is a resistance line. But then it doesn't break through it, and it will first form the handle on this upper half of the cup. So this handle itself, as we can actually see, it's actually a decline of 10 to 12% from this line. And this portion of the handle is to actually shake out weaker holders, which is the same case as the previous investor, which bought it at the old high, but now one less loss over here, so they actually sell. So the note that they actually highlighted, or the author highlighted, is that the volume at this handle should be less, or actually light. So the overall trend for the cup with handle should be at least 7 weeks or longer, and the buy point will be 10 cents above the peak in the handle, namely the old high resistance with the 10 cents. This is to make sure the stock is breaking through its resistance with volume at least 40 to 50% higher than the normal day breakout. So the maximum buy range, as advised by the author, is 5% above this 10 cent buy point of the old high or resistance. Okay, so let's recap with the same rebook daily chart. What we observe over here at the handle area is that it does have lower volume at the handle, which fulfills the criteria. And after the breakout from the old high, we notice that the volume actually increases over 100%. So this is actually the example of cup with a handle using rebook. So next, the second pattern that we'll be looking at is saucer. So this is similar to cup with a handle, but in this case, the depth is actually shallower, and the minimum length is more than 6 to 8 weeks. And the handle portion will not be more than 8 to 12%, as what we noticed just now. The pullback actually serves to shake up the holders, which they notice that the market indexes sell off sharply. And basically, they will want to retain a significant amount before moving up. So the reason for this handle portion is to also shake out weaker holders that might cause the stock price to further drop. So once the handle and the whole pattern forms with good volume, we can actually use the same concept as cup with a handle. So the chart-based pattern normally lasts 12 to 13 weeks in this situation, but sometimes even longer, 24 to 26 weeks in this saucer patterns. So let's take a look at an example, which is the Delta Airlines. Similarly, we'll look at the weekly chart, and Delta Airlines actually does new jet planes. So they actually experienced airline boom for this period of time that they actually did this analysis. So over here, we can notice that they have a long saucer with handle, and over here, we don't see a very deep kind of changes from the highest point to the lowest. So this is the basically saucers and cup with a handle is about the same in terms of their mechanism, but then for the dip that it's forming is actually lower. for this scenario. So the third pattern that we'll be looking at is double bottom. So basically, double bottom looks like a letter W, which the second leg should undercut the low price of first. So we will explain more about this later. And the buy price is basically at the middle peak of W. And in this case, the peak should be below the old high peak price of the overall double bottom patterns. So the volume itself that we should be noticing is at least 50% or more, or at least 25%, because anything less than 25% shows that there is a fair chance for the stock price to not sustain it. So it's actually explained over here. If weekly chart shows less volume for the breakout week, it means that they have poor demand at critical time and potential failure for this to form. So here we will take a look at the example of Nokia. Similarly, we are looking at a weekly chart where Nokia was the leaders in cell phone during the period of this analysis. So the portion that we'll be analyzing is actually over here. And if you notice closely, the double bottom is a W, and you can roughly sketch a W from this graph pattern. So let's take a look at the explanation from the author itself. How this double bottom forms is also starting with a 30% prior uptrend, and it will start to drop, and the drop itself will have the W sign. And over here, we can see that there's 2 points. The first W, the first leg, and the second leg. So what was emphasized by the author is that the second leg should always undercut the low of the first leg. So this also serves to shake out weaker holders, similar to the cup with handle. So why William O'Neill emphasized a lot in shaking out weaker holders is because when the stock price is trying to rise, they will tend to sell for these investors. So when they are trying to sell, this makes it harder for the stock to move higher. So after shaking out the weak holders, only the committed investor remains, which actually allows the stock to move to a higher high. So based on the checklist, the total depth in the base from the absolute high to the absolute bottom should be less than 40%, which means that the price from the highest to the lowest here should be less than 40%, and the length should be at least 7 weeks, with the first week from the down week as the base. So the ideal buy point, as mentioned, is the midpoint of the W. So over here, you can see the buy point is based on the midpoint. And for this, the 13 weeks double bottom, second bottom is below the first. So this is the double bottom patterns from the chart. Next, the fourth pattern that we'll be looking at is flat base. So this is more straightforward. Basically, it just means the pattern goes more or less sideways. So this will form two-stage base after the stock advance and retain most of the 20 to 25% from the initial base. Time frame that looking at is 5 to 6 weeks. So let's just look at the example to have a better understanding. Here we'll look at Cisco's system, similarly a weekly chart. So here we can take a look at the 5-week tight close. So here when they mean tight close, it means that the closing price is about the same. And the flat base refers to this portion here. So we can notice that the overall stock doesn't move much at this portion. And for flat base, the buy point is after the breakout from the resistance point. So here, there is also further explanation for the flat base. Based on the author, it actually provides second opportunity to purchase the stock if means the cup with a handle or double bottom trend. So similarly, we have the first step of a 30% prior uptrend, and after that, it will actually form the base. So this base itself is more or less like a shakeoff, like a slow grind. And when the stock doesn't make much progress, weaker holders lose patience and sell. So similarly, more committed investor hold and may pick up more shares within the tight price range. So there's also a volume change that we should be noticing around this period. So the length will be roughly around at least 5 weeks, and the depth should be within 15%. So same as all the trends or the patterns that is advised by this author, the ideal buy point is 10 cents above the peak to make sure the stock overcomes the past resistance price. So the volume at the breakout, as mentioned, should be at least 40 to 50% higher than normal. So what we notice here is the volume itself. Previously, the volume is low, but when it actually reached to this support line, we can see that the volume increases, and the volume actually further increase when it breaks out from the resistance line. So this is the overview for flat base. And the last pattern that we'll be looking at is ascending base. So this also happens after the cup with a handle or double bottom patterns. So this basically looks at 9 to 16 weeks for time frame, with around 10 to 20% pullback in price. So basically, each pullback low ends at a slightly higher price level. So what this basically means is we have the example of monogram industry, similarly a weekly chart. So this is actually doing toilet for New Jet planes, and they also follow the airline 1963 to 1965 boom. So for ascending base, it actually happens this portion. So first, they have a big volume clue that is actually happening before. And for this case itself, what we notice is that whenever they form the low, the next low itself is actually higher than the previous pricing. So this is what they mean by, for the ascending base, the low itself will slowly build up the base until it reaches the third base, and it will actually just marks the end of the ascending base. So with this, it will be the technical analysis part, which is actually emphasized by William O'Neill. And with that, we will take a look at the next portion, which is the canceling system. So this is a method that is developed by William O'Neill. So first thing that we will highlight for the canceling is the C. So C basically means current quarterly EPS. So this is the number one factor to consider when deciding the stock. So by accelerating the EPS growth is what attracts the attention of large institutional investor. So 18% quarterly EPS is the minimum benchmark, as very best stock typically have gain of roughly around 50 to 100% now. So one point to take note is that we should make sure the company is also strong in terms of the ingredient that generates this earning growth. So what do we mean by that is basically we should look at the sales growth. So the benchmark that he is actually recommending is around 25% in the quarters that we will be comparing. So for A in the canceling system is actually the second most important portion. So A refers to annual earning increase. So company can actually cut costs or maybe take other measures to boost the earnings for maybe a quarter or two, and can mask some serious problems such as maybe the demand for product has been dropping, or maybe declining profit margin, or even negative industry trends. So this might be able to be covered or maybe just hide from the quarterly portion. So we need to also make sure the annual earning, such as which actually reflects the long-term earning growth, is positive in this situation. So over here, the portion that we'll be looking at is the growth of EPS should be at least 25%, or actually significant growth in EPS for the at least 3 years. And one quantitative what we have learned so far from our VIA methodology is also aligned here, which is the return on equity. He is also expecting this to be more than 17%. So what this return on equity means is it just shows how well the company is managing its capital and help to identify the best running business in this situation. Okay, so after understanding the CAA, the N itself refers to the new products, new management, or new highs. So basically, the market is always forward-looking and searching for the next company with new game-changing products. So all this innovation can come from maybe young entrepreneurial firms or even established companies to reinvent themselves with maybe paradigm-shifting products and perhaps maybe new management. So an example that maybe we can actually relate to is actually Apple, where Steve Jobs, returning as a CEO, brings about a string of revolutionary products, such as iPods, iPhones, iTunes, and iPads. So N itself is actually the key for the company to generate continuous profitability to support the CAA and also A in the CanSlim system. So for the fourth portion, S itself refers to supply and demand. So over here, what we are actually looking at is basically the law of supply and demand that is actually happening in the market. So a strong demand but limited supply of this of available shares of this company will push the stock price up, and vice versa, where oversupply of shares and also weak demand will cause the price to drop. So we should definitely look out for some of this point over here, which is actually the stock itself is actually owned by top management or maybe certain investors, and also some companies which are actually buying back their stocks. And definitely this is aligned with our VIA methodology, which is actually to have lower debt to equity ratio. And companies is also trying to reduce their debt to equity ratio for the last few years. So basically, this also emphasize on average daily trading volume to measure the demand. So basically, how do we know the demand of a stock? Is just to look up for the average daily trading volume. Now for the next portion will be L. L refers to the leaders or laggards. So in a stock market, everything is actually relative. So over here, we are looking at to buy the top 2 or 3 stocks in a strong industry group, because institutional investors not just looking for good stock. They are actually looking for the best of the best, which is actually having the most explosive earning, sales growth, and maybe strong game-changing new products, which is covered by the CAN portion as shared just now. So with all this criteria, it can actually make the stock price goes up, making it both an industry and market leader. So over here, there is also a portion that they refers to, which is a relative strength rank. So what this basically means is actually it's a special kind of analysis that is also done by William O'Neill, which basically it means the RS rating compares a whole basket of stocks, and they will basically rate each of the company with this rating. So an example is that the RS rating of 85 means that over the past 12 months, this stock outperforms 85% of the companies in the IBD, which is the Investor Business Daily database. So this is actually a special algorithm which is calculated from their software. So now we will look at the 6th portion, which is on the CanSlim, the I, institutional sponsorship. So basically they are advising to look at institutional owners of being 10 and also the quality of owners. Definitely he advised to look for stocks with increasing, not decreasing numbers of sponsors. So this refers to the owners, the ownership of stocks by the mutual funds, banks, pension funds, and other large institutions. So what we can actually understand from this portion is that professional investors, they have their own teams of analysts. So they actually research thousands of stocks. So if they are actually picking the stocks that we are interested in, it's also a good confirmation from their point of view. So one good point to actually notice is that if the institutional investors are actually increasing the number of funds quarter to quarter on the stocks. So one point that is actually listed, or quantitative point, is that to have this good daily trading, we should look at the average daily trading volume of a stock of roughly around 400,000 or more to know that whether this company has sufficient institutional support, sponsorships. So with that, we will take a look at the last point in the cancelling system, which is the market direction. So overall, the market direction, we will focus on this point here, which is to follow market leaders for clues on strength of market. So what this means is that when all these 6 trades line up, but overall market is actually downtrend, it will be very hard for even the best stock to actually move higher. So what is summarized by William O'Neill is that normally 3 to 4 stocks move in the same direction as the general market, either going up or going down. So what do we mean by general market is the major indexes such as Nasdaq, the S&P 500, and the Dow Jones. So simply put, if you buy a stock when the market is actually going up, it's in a strong upwards, then you will have up to 75% chance of being right. But if the opposite happens, when you buy it at the market downtrend, you have actually a 75% chances of being wrong based on the author's ideology. So with this, we will take a look at a case study on the cancelling system. So we can actually access the investor business daily. And over here, we will take a look at the large or mid cap leaders index. And from here, what we notice is that the top of the list comes out a company known as CF Industry. So for today's sharing, we will take a look at the company CF Industries. First, CF Industry is actually a manufacturer and distributor of agriculture fertilizers, including ammonia. So the first C, current quarterly EPS. So we should take a look at the increase at least of 18% in the quarterly EPS compared to prior year. So since they actually recently launched their financial report, we are comparing in terms of the year. So what we notice is that the yearly EPS, they do have a strong increase as compared to last year. So over here, we can notice that they have an increase of 288.4% for the EPS. So over here, we will also take a look at the secondary factor that is actually listed. They will be looking for quarterly sales growth of 25% over the last 3 quarters. And also, we can also compare at least one stock in the same group that shows strong quarterly earning growth. So this is to understand whether the industry itself is actually doing good. So breaking down all the data that we have for CF Industry, by comparing the sales growth quarter to quarter, we observe that it actually increases in the second quarter compared to the first, slight drop in the third quarter compared to the second, and a huge increase for the fourth quarter comparing to the third. And if we do a comparison just by this quarter with other quarters itself, it's actually an overall uptrend that we are noticing. So for this case itself, we can observe that they do have this quarterly sales growth of 25% among this fourth quarter comparison. So another point to take note is that if we compare the same industry, and in this example here, we will be taking a look at another company known as Mosaic Fertilizer. So it's a Fortune 500 company, and they have their own product known as Mosaic Fertilizer, and it's actually in the same industry as CF. So overall, what we are observing is that the sales growth is definitely upwards, And comparing with the fourth quarter, we can see that it's also an overall uptrend, which is increasing throughout the year, throughout the few quarters. So basically, we can know that the industry itself is actually doing strong in terms of this comparison. So for this case itself, it's actually aligned with the author's ideology for the current quarterly EPS. For the second portion, which is the annual earning increase, so we should take a look at the significant growth in EPS for each of the last 3 years. So over here, we are comparing the data from 2021 to 2018. So if we compare 2021 as the base, what we notice is that the 3 years actually have high growth rate. So this is aligned with the annual earning increases. And for the secondary factor, as what we have understand from our VIA framework, the return on equity should be 17% or more. So this is actually the recent 10 years return on equity, which they have 6 out of 10 years, which is actually more than 17%. And the annual cash flow per shares is the second portion or the second checklist for the author. So this itself, they are comparing a benchmark between the annual cash flow and also the actual EPS by at least 20%. So we actually tabulate the data with the free cash flow per shares comparing with the EPS. So overall, what we notice is that the difference itself is definitely more than 20% when we are comparing throughout the 5 years data. So next is the earnings should be stable and consistent from year to year over the last 3 years. So when we actually extract out the CF industry holding net income from Guru Focus, what we observe is that from December 17 to December 20, it's actually rising steadily and it's actually doing very well just last year. So overall, we can compare just for the last 3 years, right? They actually have an increase throughout these years. So for this itself, the portion of A also fulfills the requirements or the criteria that is specified by the author. And for N, new products, new management or new highs. So basically, we will be looking for all these items. And the next point is strong volume on price move up. So this is actually a snapshot from their annual report that is just launched. That was just launched last month. So one key thing to highlight is that with rapid developing demands for hydrogen content of ammonia in clean energy applications, they are actually expecting global ammonia market will soon need to incentivize new greenfield ammonia projects to meet this demand. So for the company itself, they are expecting a bigger market to be opened up. And with a bigger market itself, with new markets that they will be opening up, they will be expecting a good growth to support the C and A, which we highlighted just now, which is a current quarterly EPS and also the annual earnings. So another point to take note is that in recent years, the fertilizer producers, including the CF holding, have built new production facilities or expanded capacities of existing production assets or announced plan to do so. So these 2 points actually aligns with the N portion in the CAN-SLIM system. So with that, we will take a look at the second point, which is the strong volume on price move up. So this is actually a price chart for CF. And we notice that whenever there is a high or an increase in terms of the price, we do notice that there is a high volume. So this is actually boxed up, which we shared over here. So this also aligns with the N portion that the author actually specified. So the most recent one is actually over here, which is actually taken on the 4th of March. Okay. So in the CAN-SLIM system, the next that we'll be looking at is the S, the supply and demand. So over here, the quantitative analysis portion will be looking at companies, whether they are buying back their own stock and the debt to equity ratio. So this is actually the outstanding shares of CF. And what we observe is that throughout the years, it's actually decreasing. And for this situation, it actually decreased from 2012 to 2021. And we should also understand why companies buy back their own stocks in this situation. So there is definitely a reason behind for companies, or in the CanSlim system, William O'Neill actually add this in. And also, the three reasons for this companies to buy back shares is, first, it allows companies to consolidate ownerships. So they allow the company itself to have more power to decide on the future. And next is when the market is actually in pessimism, company can also buy back their shares to increase equity value. So equity value is basically the share price multiplied with outstanding shares. So this will make the company looks financially healthy and attracts more investor, which is the third point. So the next portion in the S portion, is to look at the debt to equity ratio. So we should actually, based on the VIA framework, we should expect the debt to equity ratio to be less than 0.5. But with William O'Neill's checklist, they actually align with the lower debt to equity ratio, but they also add in one more where companies reduce their debt to equity ratio over the last few years, which we can observe from this trend. It actually increased to this peak here at 2016, and it slowly, 2017, and it slowly dropped. So over here, we can observe that the company itself is trying to lower down the debt to equity. So basically, what summarizes here is that the S portion is also aligned with the investors or the author's ideology. And after understanding the S, we should look at the L. So L means leaders or laggard. So as shared just now, the RS rating is a special algorithm that is actually calculated from the Investor Business Daily. So from the data itself, we notice that the company actually rates 99 in terms of the relative strength. So this means that the company is actually outperforming 99% of companies in the IBD database in the past 12 months data. So for this case, it's actually a good sign for the IBD's analysis based on the checklist. So we'll take a look at the next point, which is the I, institutional sponsorship. So here they are actually advising to have at least 10, and also looking for quality owners, and also having an increasing, not decreasing numbers of sponsors. So this is all the data that we can actually extract out from the internet. So what we observe is that they have up to 892 institutional holdings for CF industry, with the top three being Vanguard, BlackRock, FMR. So the portion that they are taking up is about 30% of total shares at this CF. So basically, it means that the company itself has large institutional sponsorship. And for the last point itself, basically to actually follow market leaders, as what we mentioned just now. So in this situation, we should always look at the general market trend, which is actually changing every day. So for this case, we can actually just take one more step to take a look at the three major indexes, which is the NASDAQ, S&P 500, and also Dow Jones, to align all the points together. So in summary, the CanSlim system, for the first point itself, the current quarterly earnings, we should look at stocks with increasing current quarterly earnings of at least 25%. And for A, the annual earning growth, the company should show strong long-term growth, and if possible, they should grow at least 25% or more for the past 3 years. N is to support the current and also annual earnings, which is the new product service management, or actually higher price. So basically, what makes a great stock is if they have something new that they actually introduce to the market. So always look for companies with new game-changing products and services. And for supply and demand, with more investor demanding a limited supply of shares, stock price goes up. So look for heavy volume accumulation by institutional investors, particularly at buy points. And for L, the leaders and laggards. So as what we try to emphasize is that the author always looks for leading stocks in leading industry groups. So look for the best of the best in the leaders for strong industries. And for I, institutional sponsorship. So professional investors like mutual funds, pension funds, actually accounts for about 75% of all market activities. So always look out for the institutional sponsorship. And for market direction, as what we highlighted just now, 3 out of 4 stocks follow the market trends. So we'll want to always trade in sync with the market. So based on 7 criteria on the candlestick system, they actually, CF actually passes it. So one more point to actually take note is that we can also apply the technical information that we actually highlighted from the start of this presentation. So over here, what we notice is this portion, we actually observe double bottom. And for double bottom itself, let's take a look at a recap. So it actually shaped like a letter W, and the second leg should always undercut the low price of first. So the buy price is the same as the middle peak of W. And when stock breaks out of this basis, the trading volume should be 50% or at least 25%. So based on this, let's analyze the price. So the past low here is 19.73 and close price here is 32.72. So the overall uptrend is actually 65%, which fulfills the first step. And next, we observe the W here with the second leg actually undercuts, which is actually the price is lower than the first. So as mentioned, the buy point is at the middle of the W. And what we observe is that what we should also take note is also the volume. So over here, which is the buy point, we should expect the volume to be at least 25% or if better, 50% based on the author's idea. So when we compare it with the data, the average volume on this chart itself is 13 million, and the trading volume on that day is actually 16 million, 16.7 million. So in this case, it actually have the volume of 26.3%, which actually aligns with the concept that the author is sharing. So this will be the buy point, and we observe that it's actually going upwards from that point onwards. So another thing to take note is that we also cover the pattern of ascending base. So this basically happens after the breakout of the initial double bottom patterns. So let's take a look at the chart again. As mentioned, they have 3 bases that they are reforming. So the first base actually happens around this period of time that we can actually take it. So we will observe that the highest price point during that time is actually happening around this portion. So basically from this point, they actually break from the resistance value with high volume. So basically this pushes the stock up and reaches the second base over here. So the second base also happens similarly as the first base, which means that after we move up here, we take the resistance point, and when the price actually breaks the resistance, we should always take a look at high volume, which is definitely higher than the average volume. So this purple line is average volume. So basically this also fulfills the second base. And now we are at the third base, as the highest point that they are reaching is around this portion. So when we observe the third base here, the price when it breaks out it's also higher than the average volume. So now we are actually at the third base. And for ascending base, after this third base, the trend is too obvious to all investors and will most likely fall in share price. So based on the author's advice is to look out for the stock new base to form and then recalculate the price entry point. So this is basically the last slide for today's sharing. So thank you so much for your attention.
Okay, just to check whether the teammate can hear my voice, right? Yeah, but right now they are seeing Wicked slides. They're seeing me, trying to see me, Okay, by the way, Wicked, just hang around for a short while. I think right now the camera is facing me. By the way, I would like to thank Wicked for sharing something that is really outside the scope of value investing, right? And if you may notice, the entire presentation consists of two parts. The first part is the technical analysis. By the way, Wicked is very, very detailed one. You notice that his style, right, is he talk about the text first. Yeah, for example, let's say, let me see the first technical pattern, right? Let me
let's just go back.
Yeah, for example, the first one, he talks about the cup with the handle. So you may notice that the slide he first described in text, what is it? And because it's very difficult for us to visualize, right, using text. Then after that, he showed an example of a cup with the handle. And then after that, he draw lines, some resistance line, how it goes down and then goes back up again. That looks like a saucer plate, right? A cup, right? Cup, a curvy cup, and then it comes with a handle. So you realize at the beginning, he talks about 5 chart patterns. Now, by the way, there are many types of chart patterns involving the candlestick. But I think because most of our graduates are value investors, so we just want to introduce something very simple, something very new, so that in case in the future, if somebody talk about technical analysis, at least they know these 5 chart patterns. So that is a technical analysis part. Then, because this William O'Neill, right, come up with a candlestick method where it combines both the fundamental as well as the technical. So you realize that Wicked, after talking about the 5 pattern, he described what is the candlestick, and he go line by line, C, what is it? A, what is it? N, what is it? Then after that, he introduced a company called CF, ticker symbol, right? CF Industries, so that he take this example and then relate first to the candlestick, which is the fundamental part. Then subsequently, he introduced the technical part. So you realize that Wicked is really very meticulous about this. Yeah, very cheap, right? So make it say very cheap. Yeah, so this is for people who love technical analysis. Also, at least for most of our grads who are value investors, that you right now know what is a technical analysis. But remember, the lucky thing about this part is at least there's both a combination of technical and fundamental. And I'm not very sure whether Minke is it our graduate. If you're not a graduate, then some of the terms, even like earnings, may be too cheap for you. Okay, maybe I pause it for a short while. I just want to check with the audience, right? We have about 265 people on YouTube watching this. Anyone has any question? Maybe you just take 1 or 2 questions, right? Yeah, then I do a very quick recap of what Wicked is saying. Then after that, we go for a break. Yeah, so after chim stuff, we need some fresh air, right? Yeah, but by the way, as I was saying, Wicked really went out of the comfort zone to do all this. Because this is something even myself, I was very familiar in my 20s, but it's been quite a while, so I really forgotten most of this stuff. Okay, anybody has any question? I'm just looking at the live chat, right, on YouTube. Don't have, Make it say you have a question, You say, yes, I am. Oh, you are great, is it? Okay. So make it maybe you're more suitable to be a value investor now. But at least you know the 5 chart patterns, right? So some people want to bluff you, at least you know, And then you know what's a candlestick. And the interesting thing, the candlestick, as the name implies, it looks like a candle with a wick, so candlestick. Okay, anybody else has any question? Sure, if not, we're going to let Wicked rest, right? Okay, don't have, Okay, don't have, it's okay. Wicked, so I'm looking at the chat, there is no question. But thanks for doing this.
Yeah, thank you.
Topic. Thanks.
Thank you so much.
Okay, bye-bye.
Bye.
Bye, thanks. Yeah. So right now, should I turn on mute, unmute? Yeah. Okay, so can you hear my voice right now? Okay, good. So there's one guy or girl, Supreme Master is US bullying China. I mean, this is outside the scope, so I'm not like a politics commentator, right? So sorry, something outside my competency, right? So great job, I must say, going through the book and educating all of us. So Diraj, thanks. Diraj right now should be in Switzerland, right? So, yeah, Diraj, are you in Switzerland? So you're in Switzerland watching us, watching this, amazing, right? Yeah, so Minke say I read a few times book and also have some technical, I'm not so cheap. Okay, good. Kara says, should this approach be combined VI approach for stock selection? Kara, later I'll answer that question. Just give me a second, right? Okay, good. So right now, I'm just going to share my slide. Let me just pull up my slides. Now, remember just now we talked about the intention, right? Yeah, just give me a second, right? Give me a second. I'm trying to pull up my slide, right? Give me a second. Okay, I'm going to share screen right now, just to make sure that everybody. Dira say close to the war zone. You're in Switzerland. Come on, how can you be close to the war zone, right? War zone is Singapore. Singapore in the hawker center is war zone. No, just kidding, right? Now, is my screenshot on? Okay, my screenshot on. Now, this is just a quick recap. And just now you would have heard what Wiki has presented. Now, just to let you know that for every single month, we have about 2 or 3 speakers. And then each speaker is supposed to read a book. You know, reading book, it can be a torture, right? Because especially investment book, which is pretty thick, So actually, we have a team of people, right? We call this team Project X. You know, the X-Men, right? So Project X. So each of these each of these grad is supposed to read a book. And because the book is very thick, right? So they're supposed to read the book and they're supposed to summarize the entire thick book. Then they're supposed to take the summary and then put it into slides, like what Wiki has done. And of course, because the book is quite thick, right, they have to cut into 2 pieces. So just now was a part 2 of the presentation. So last month, right, Wiki did a part 1. Yeah. And then and then not only he has to read the book, extract out the G's, he has to look for some companies that are not found in the book, and then take whatever he has learned and then apply it into this company so that there is a real life application. Yeah. And just to let you know that we have been doing this since June 2010. So that's a long 12 years. Yeah, so like just now what I say, right, we talk about anything under the sun related to money. And even though we are value investors, we also want, how should I say, our grads to be mindful, right, that in the money or the investment world, what are the things that's happening. So technical analysis is just one of the small little pieces of puzzle, right, that we want all our value investors to know. So that's one. Yeah. Now, so what I'm going to do is, let me just do a quick, how do you know which pattern the stock is trading beforehand? You really have to look at all the chart patterns, take a few steps back, right, and then try to draw lines. Yeah, you must be passionate about this. Yeah, so usually those uncle, auntie, when they do this full time, they are quite free, right? And they don't like to read annual reports. So what do? They look at charts, and look at charts to them is visual, or doesn't require much thinking. Yeah, not like earnings per share, free cash flow. Yeah, so the senior people like to look at charts. And because we are value investors, I think there is no harm, right, that you find a good company. And if you learn something extra like technical analysis, if you want to add, we leave it to you. So there's no harm learning more. And then it's a matter of whether do you want to apply, you want to combine or whatever. So we let you decide. So just now when we came, right, of course I give some intro. Wicked is the one that talks about the technical analysis as well as the fundamental analysis. Now, before we go for a break, let me share with you a very piece of good news. If you came in quite early, you watch a Wikid's presentation, and if your mind is open about how should I say, about technical analysis with combination of a value investing or with combination of fundamental investing, right? I'm going to share with you something very exciting in the next 5 minutes. Now, there is no single investing method is perfect. Yeah, it's perfect, right? For example, Warren Buffett loves value investing. I'm a value investor. So to me, a value investing fundamental analysis suits me. Yeah, suits me. So that's my style. Yeah. So if I like to eat durian, doesn't mean that everybody else has to eat durian. They may like to eat mango, strawberry, or whatever. So each of us has our own style. The most important thing is the tools that we use. It works, and it works for us. Works for us, right? Now, there is in a value investing world, even though it's a very good investing methodology that's been around since the 1920s, which means that it has been around for 102 years. it predominantly, right, focus on companies with strong fundamentals. That means they are already established, it has an economic mode and so on. But value investing may be difficult, right, to find companies that are in the early phase of their development. So for example, if I could turn back time, right, and if we use our VA funnel, we try to screen for Amazon company or Facebook company or Tesla or whatsoever, right, we may neglect this group. Yeah, because value investing has to look for strong fundamentals. If there's no strong fundamentals, then this group of companies which predominantly may become a very disruptive or fast growth stock or explosive stock, right, as the picture implies, we may skip it. Now, so in other words, value investing has a small little problem in trying to find fast growth company in the early phase. For example, right, because we are looking for strong fundamentals, yeah, then where to find one, right, when it doesn't fit inside the VA or the value investing funnel. And the second thing, right, and even if we find it, because in the early days they may not make money, so negative. And because negative, you cannot calculate intrinsic value because the EPS is negative, right? Or the EPS is only like 1 year or 2 years. So for EPS, if it has only 2 years of data and then you want to extrapolate 10 years, I think it's quite difficult. Yeah, so there's something that is outside the reach of value investing, especially for fast growth company in a very early phase, such as Amazon. So if you cannot calculate intrinsic value, there's no way you will know the entry point. And if you do not know the entry point, no need to talk about exit point. So these are some of the common challenges that value investors will face, right? If their priority is to find fast growth stock in a very, very early phase of development when they do not have fundamentals. Yep. Now, so the interesting thing is about 7 years ago, I met one of my graduates. He's still with us. Right now, he's my co-trainer. His name is called Xian Chong, right? So Xian Chong is, I'm like a very pure value investor. Yeah, in the early days, I was a day trader, but as time goes, I think as I grow older, I think charts may not be suitable for me. So I focus on value investing full time. For Xian Chong is much younger than me. I think easily maybe 10 years younger than me. Yeah, so he's into combining technical analysis and fundamental analysis. So he's like a younger version of this William O'Neill. Yeah, and I've known him for many years. And it's only recently when he came back from UK, right? He followed his wife to go UK, and then recently he came back, and then he shared me some of his thoughts. That wouldn't it be nice if we can use a combination of technical analysis as well as fundamental analysis, like William O'Neill, right? Like a modified version of a cancelling method to identify good companies at a very early phase. So let me share with you the good news, right? Now, coming back to here, remember there's always a problem in trying to use value investing to find fast growth stock in the very early phase. Yeah, but don't worry. Me and Xian Chong, we eventually discovered a solution, right? And we decided to take this solution and come up with like a training program so that we can educate all of you, whether you're grads or non-grads. So in other words, whatever that I'm going to share in the next maybe 5 minutes is both for grads and non-grads. Now, so what's going to happen next 5 minutes, I'm going to share with you a very important knowledge. And we name this knowledge, right? Number 1, portfolio management, ETF, and growth investing. So it is this growth investing, right? Yeah, that requires both a combination of technical analysis as well as a fundamental analysis. This is very important. Right? And because to invest in fast growth stocks, and fast growth stocks are usually not so profitable, so the risk tends to be higher. And to mitigate this risk, right, we need to add a component of ETF, right, into our portfolio. So in other words, to mitigate this risk, we need to have this component. Yeah, then we focus on the second one. So in other words, these two, right, are the husband and wife. They cannot do without each other. Or they're like Siamese twins, or they always stick together. So in order for us to grow, to look for the next Amazon in the very early phase, because they're high risk, right, we have to mitigate this risk by adding ETF. And not only we want to add ETF, we want to add high growth and inverted commas, right, relatively a safer ETF into our portfolio. So that regardless of whatever happened, right, in case we screw up, the stock that we identified didn't work out, our portfolio overall still beat the market, which is about 10% per year. Okay, so how do we go about it? Now, the objective of these 2 days, right, that's constructed by Xian Chong, consists of 2 parts. So the day one is to bulletproof our portfolio, right, that can beat S&P 500. S&P 500 has been generating about 10%, right, since 1965. Yeah, so we don't want 10%. We want more than 10%. For example, right, let's say if we can get 15%. So what we're going to do is we're going to take this extra 5%, right, that we have already made, and we are going to use this 5%. It's like our spare cash because we aim for 10%, but we already exceed 10%, right? So we got this 5% extra money, right? So we're going to take this extra 5%, and we're going to search for the next fast growth company, so that preferably this 5%, right, may become the next 500%. Yeah. So this part is already intact, which is 10%, right? But we are using this spare cash, right, or spare profit or spare winning to grow this to be 500%. So that eventually this 500% can combine with this 10%. Yeah. So this is our objective for 2 days. So let me share with you when it will take place, right? Now, this 2 days webinar is going to take place on the 23rd and 24th of April. And let me share with you some detail. Now, on day 1, right, remember, day 1 is about bullet-proofing our portfolio. So that in case we find the next Amazon, but eventually it didn't work out, so we can still make maybe about 10%. So that's our goal, right? So our objective is to build a portfolio that will almost be able to beat the market with ease, which is the S&P 500. And to do that, what are the things that we need to do? We need to first construct a portfolio, right, a bulletproof portfolio consisting of high-growth ETF. High-growth ETF, this is the first thing, so that there's an extra spare winning, right? Spare winning. Then the second thing is, in order for you to put money into this high-growth ETF, we need to let you understand, not just the surface, but in-depth understanding, right, of different classes of ETF that has beaten S&P 500. So this is the second thing, right? And of course, the last one is we put this theory into practice. Yeah, so that all of you who are watching this, you can construct a portfolio, right, that almost be able to beat the market. So this one, so remember, day 1 is all about exceeding the 10%, so that we use the extra spare cash to search for the next Amazon. Okay, so let's say this portfolio is constructed. Oh, by the way, it's a hands-on exercise. It's not just a theory, right? And I'll share more. So right now you already have some excess, right? 5%, 6%, 7%. So once you have this excess winning, keeping your portfolio, which is already running at minimum of 10%, right? Then we're going to take this extra winning, we're going to move to the day 2. So in the day 2, we're going to take this extra winning to search for the next Amazon. Yeah. And then not only that, we also want you to find a good entry point, because you find a good one, you don't know when to enter, so no use. Okay, and a good exit point, right? So that you can get the capital gain. So how do we achieve these 2 objectives, right? So first one, we are going to use a combination of both fundamental and technical. Since we start off as value investor, I think having a fundamental is very important. Yeah, this is very important. So we need to check off this one, right? Then we combine with some technical analysis. Yeah, it's not a pure technical analysis. We combine both. So it's like a candlestick, but it's a modified form, right? Yeah. And then not only that, right? We will teach you how to construct a scanner, and you don't have to pay a single cent. So in other words, the scanner, right? Yeah, it's completely free. But in order for all of you, whether you're grad or non-grad, to construct this scanner, right, you must have the thing of SWIM TD and metric platform. Because from now until April, there's still quite some time. In case you do not have this TD and metric account because you're not a graduate, you can always apply for one. Or how to do it, don't worry, we can send you the menu, right? And then maybe tomorrow you can start. Usually it takes a few weeks how to get this thing started, right? So remember, so this is a hands-on exercise, right? That means number 1, we create a portfolio with some excess winning. Take this excess winning, use your personal scanner, right? And then search for the next Amazon. Yeah, so these are the 2 days. Now, and of course there are more things. This is how Xian Chong look like. Yeah, how Xian Chong look like. So let me just share with you. He's a very mathematical person. So I think I'm glad that he's part of VIA, right? So he has a master degree in mathematics. So in the early days, when we do not know how to invest, same thing, he got burned out, lose money and so on. And then it's by chance he got to know about me, right? And what we do VIA by attending our class. So you realize that, hey, actually, in order for us to invest, it all has to start with fundamental analysis. The company has to be strong and so on. Or at least there must be some sign, right? And if you look at the William O'Neill method, you realize that the candlestick is a series of fundamental criteria. Yeah, then only when it meets the cancelling, right, then it adds on to a technical analysis to find the entry point. So one more time, the cancelling is the fundamental. It has to be okay, right? Then you use the technical analysis to put the entry point as well as the exit point. This is something Hsien Chong is definitely much better than me. Yeah, which is why he's the key trainer and he's the sole trainer, right, teaching in these 2 days portfolio management as well as ETF and growth investing class. I'm not the one. Yeah, because he's good in technical analysis, but I'm not. I'm not, right? Yeah, so what he's going to do, he's going to combine value investing, right, plus a technical analysis so that all of you can find the next Amazon. Next Amazon. Yep, so this is Hsien Chong. This is Hsien Chong, right? So let me share with you today is quite interesting because in the very beginning, I said that our gathering is actually meant for indoor, closed door, right, for our graduates. But we also want people who do not know more about us to know more about us. So I'm going to give you something special so that you remember us, right? Now, just now we talked about the 2 days, remember? So day one, we're going to talk about portfolio construction, right, using the high growth ETF. So that use the excess spare winning, and then you search for next Amazon, which is on this day 2. Now, for those people who are watching this, I think we have about 269 people watch this, right? Now, let me share with you the bonus. If you decide to embark on this journey with us, so what we're going to do is, because the course is online, right, we're going to deliver hard copy notes to you. Deliver. So that's one thing, right? The second thing is we want you to remember us. So we are going to send you our exclusive VIA leather name card. Yeah, leather name card. So this is the second thing. It's a small token appreciation. Yeah, and then the third one, right, is we're going to give you a copy of our reference book, and it's titled Value Investing Simplified. Now, some people who are watching this, you may, Alvin, say how much money to have in a thing or swim beforehand. Based on the video, like what Sir John Templeton say, is any spare cash is good. Spare cash good. So let's come back to here, right? So in ours, this is day 1, this is day 2, and then there's a bonus. This is something that we want to give you so that you remember us. 3 things. But there's one more thing. You know, Steve Jobs always liked to end his presentation with one more thing. That means in addition to all the good stuff that he say, there's just one more good thing, right? Now, so what's that one more thing? The super bonus is this. Remember the entire class, since it's conducted, it's online, and we can't see you, but yet we want to see you, right? And because it's a hands-on class, we want to involve you using the PC, bring a laptop to our class, our very own space over here in Shenton House, right? So let me share with you one very interesting thing. Now, if you decide to embark on this journey where you want to learn something like William O'Neill, right, a combination of technical analysis plus fundamental analysis, so what we do is, in addition to the 2 days, we have added another hands-on on-site. This on-site, yeah, hands-on on-site session, where you can choose to appear in our space, so that use your PC, because some people at home are a bit slow, right? So at least Hsien Chong can guide all of you. Yeah, and then of course, on this on-site session, you will also get to build your own fast growth company momentum screener for free. But provided you have the TD and Metric account, right? So now, so just to let you know that this upcoming April is our 3rd batch. The first 2 batch is strictly for our graduates. And I don't mind sharing with you, this is actually what we're going to charge in months to come, right? So our intention is to pack ourselves to the market, to other service provider. So we realize that for people who are like offering 2 days, usually theirs is 2-3K, but I don't want to exaggerate the amount, right? So I'm going to put just 1,500. Now, and if you're watching this YouTube live, we're going to do something interesting, right? And because this is like our pre-launch, we're opening to the public, because previously we are offering only to our grads. During the pre-launch, just for tonight, right, this 2.5 day, half day is the evening one, is only a mere $500. Yeah, this is super way low, below all other service provider that is found in Singapore. Yeah, and remember it's hot on the 23rd, 24th. And then one of my team member, Adeline, right, she is going to post the link inside the chat, in the next couple of seconds. So what you need to do is you just need to refresh, right? Yeah, I can already see the link. Now, I already see the link in the chat box. In case you cannot see, can you please refresh your YouTube video, right? So that right now the link is up. Yeah, link is up, Yeah. Now, because this 2.5 day and a half day involved on site, right, we also cannot accommodate the 100 people. So there is a cap to what we can do because of the space over here, So in other words, once our class is full, right, in April, that's it already. That's it. But if these 2 days you cannot attend, but you're interested to attend in future dates, don't worry, don't worry, right? So number one, a limited seats. This is not a gimmick, right? Because physical space, there's always a limit. And even though on tomorrow onwards, we can, the law allows 1,000 people, I think with the number of COVID cases, I think we better don't fool around. Yeah, so we better cap it to a certain size, right? So number one, limited seats. Once you fill up, that's it, And previously, it's exclusively for VIA graduate, right? So for the very first time, we're going to open to the public. So in other words, you can share this video with people. You can share the link with whatever, right? And in case some of you, like for example, Diraj is staying in Switzerland. You're not Singapore, you're staying in Malaysia or whatever. You can still attend the class because the class is online, the 2 days. Now, but the only thing is if you're in Switzerland, Malaysia, you cannot attend the evening one. That's the only thing. But the evening one is some extra thing they're going to give it to you. So as long as you can attend these 2 days online, you are good. You are good. And remember, right, the condition is from now until April, we purposely put April and not March, right, is because in case you do not have a TD and metric account, or known as Think or Swim, right, you can always open one. Okay, open one. It takes about maybe 2-3 weeks. 2-3 weeks. And then preferably, this is very important. Preferably, you have some experience in buying stocks. In other words, if you have zero experience in buying stock, better not. So I discourage you, right? We want your business, but I tell you what, better not. Later on, we have a better alternative, but don't do it. If you're zero, you don't know what we are talking about. You don't know what's the stock, right? I think better not. Don't. This is for people who have at least bought at least one stock before in their entire life. It can be mutual fund or whatever. So remember, so these are the conditions, right? So I tell you upfront, right? And remember, the early bird, the 500 is today because we will change our mind maybe after April. Yeah, then the 500 will become 1,500. So that will be 3 times. And then if you have any question, you can email to Charmaine at mykinesis.com. For example, you want to know our next batch state. Okay, or you want to know how to open a TD and metric account or a Think or Swim account. Yeah, all this administrative, right? You just need to email her. Charmaine is on leave today and tomorrow, but Wednesday she'll be back. So in case you email to her, she didn't reply the next day, right? Don't panic. Don't panic. Wednesday she'll respond to you. She's a very responsible colleague. Yeah. So let me just so Diraj said will be joining. Kevin said, can you skill future fund? The answer is not at the moment. Not at the moment because our course is not yet. We have many courses, right? So most of our courses are listed as skill futures, but not yet. Not yet, partly because skill futures requires weeks for the course to be like so-called listed. So not yet, not yet, right? Not yet, So, but anyway, it's only 500, It's a one-time, right? One-time, And then for those people, like for example, I saw Angeline, right, who is watching this, and many of our graduates who have taken this course. That means you're from batch 1 and batch 2, right? For those people who have taken this course, let me share with you a piece of good news. Now, the piece of good news is, since it's done on Zoom, right, we're going to share this Zoom into your closed group because you're already inside closed group. We're going to share it live. So which means that you get a chance to revise this entire 2 days with new revision information, right, for absolutely free. Zero cost for our past 2 grades. So that's the good news. Good news. I haven't told Charmaine yet. I don't know whether Charmaine will kill me or not, but I think this is something that we want to do for the first 2 batches because the first 2 batches are our grads. We want you have given us some feedback. So what we did is we want to improve on the training, right? And we want to share with you this new improved version of our training. Okay? So yeah. Who is conducting? Oh, just now I showed Xian Chong's face, right? This is Xian Chong. Yeah. So we need Adeline to post the link again in case you cannot see the link, right? And then you can refresh. Also, we are asking someone with a master degree, right? And who is investing full-time to spend time with you. Okay, build portfolio from zero, Chuan Yen. Yeah, the answer is yes. Zero. Zero. So I need Adeline to post the link again, right? One more time. Yeah, one more time. By the way, I think we can only take a class of about maybe 40 plus 50. That's it. We're not taking like 1,000, right? Yeah, 1,000. Oh, Elvin, you say TDA approval right now faster. Oh, very good. Yeah, last time it take forever, right? Yeah. So very good, Okay, so one more time. Let me just go back to this part, right? This part, So remember, day 1, yeah, Angeline, yeah, you get a chance to revise. Yeah, you don't have to stay for the 2 days. Yeah, so day 1 is the portfolio construction. And then day 2, right, is the technical analysis. If you know day 1, then you don't have to attend day 1, right? You can attend day 2. So it's live lah. You can also post your question and so on. So that's something that I just decided like 30 seconds ago. So Charmaine didn't know yet. Oh, so Wednesday I need to explain to her. So one more time, right? So day 1, constructing portfolio with ETF starting from zero. Day 2, right? Day 2, we're going to share with you a combination of both technical and fundamental analysis to search for next Amazon or next Facebook, right? Yeah. And then the bonus is we're going to send you all the hard copy notes. Yeah. So you just stay at home and chill. Hey, by the way, if you're married, with your partner, right? I mean, $500 actually your entire family can learn together, right? Or if you got projector at home, you project on the wall, then you and your spouse, together with kids, everybody watching, right? Correct, huh? Does it make sense? Okay, huh? Then after that, the super bonus is the hands-on. Of course, the hands-on only you can come, your wife cannot come. Okay, got it? Now, so one more time, our launch price, right, months down the road is going to be 1,500, and then only for tonight is $500. So it's the lowest ever in the entire universe, and it's going to take place on the 23rd and 24th. And if you are not free on this day, please feel free to email to Charmaine that you are still interested so that we can put you on the waiting list. And subsequently, when we have new dates, right, Charmaine will reach out to you. And remember, there's a limited seats. This is no gimmick, right? Because we cannot fit everyone in the classroom because we need to put tables and chairs. And originally, it's exclusive for VIA grads. But if you're not our grads, you're watching this, right? This is for you. Can we use the skill features? As of now, cannot, Wendy. But in future, maybe. Now, because skill features credit is quite strict, it takes a couple of months. Yeah, so most of our course is already funded, but not this one. This one not yet. And remember, you must have a TD Ameritrade account, but if you don't have, it's okay, right? When Charmaine come back, Charmaine can email to you the instructions so that you can open the account. And remember this key thing, if you've got zero experience, better not. You must at least buy one stocks before. Right? So remember, the early bird is tonight only. If you have any question, please feel free to email Charmaine@mykinesis.com. So the Dheeraj, very, very good, So I don't know the hours, how should I say, right? Singapore time and the Switzerland time. Yeah. Or how to apply, Adeline, can you just post the link again? So there are a lot of things and then it get pushed up, right? So Adeline is going to post the link again. Now remember, the link goes to an Eventbrite, right? It goes to Eventbrite. Once the course is filled up, right? It auto shut. It auto shut, right? Yeah. Alvin say paper money. Okay, so the link is there, right? So what I'm going to do is I'm going to give you maybe, 10 minutes? 10 minutes, We're going to give you 10 minutes. This is 10 minutes break. It's really not a break, right? It's for you to click on this link, right? So that Eventbrite, a page pops out and you need to fill up. So after these 10 minutes of registration time, right, what is going to happen is Fauzi, right, who is our graduate. Okay, so Dheeraj say, okay, very good. Dheeraj, I really appreciate, So we are really international. Dheeraj went back to Switzerland, right? So can you imagine, we are still so-called in close contact with him. I see his name, I already know where he is. Because he added me on Facebook. So I stalked him, you see. Because I'm jealous, I cannot go to Switzerland. Yeah, Switzerland, Okay, so we're going to go for a 10 minutes break, right? The link is going to be there. I just need Adeline to post the link one more time, right? After the break, when you come back, now it gets more and more interesting. Yeah, so just now we talked about William O'Neill, right? Technical and the fundamental analysis. When Fauzi come back, through his eyes, he will share with all of us his, how should I say, his feelings, from not knowing how to invest, and then the struggles that he have to become an investor, right? Okay, good. So we're going to go for a break, and our team member is going to put like a timer, right? So don't worry, even though, Dheeraj, thanks. So even though the timer is there physically, we are still here, right? Except that I rush to the toilet very quickly, and then I'll be back, Okay, so I'm going to hand over to my team member. Remember, this 10 minutes is for you to register. Once the seat is filled up, the Eventbrite will auto shut down. Not say shut down, will close the registration. And then if you got problem trying to book, that means no more, full house. Okay, got it? Okay, so 10 minutes, right? Okay, let's start now, and me and Fauzi shall see you 10 minutes later. Okay, thank you. From VIA, I'm back. Just to answer a couple of questions, for example, Chuan Yang say, oh, does the 2 days include the can slim modified? The answer is yes. The answer is yes, right? So, yep, just only a few seats left. Only my staff know we're a bit far away, right? Yeah. Okay, so let's focus on what we're going to do next in the next couple of seconds. Just now we have done this welcome speech, right, which is me. Then we can talk about the can slim, video only. We took a short registration break for you to register for our brand new a portfolio management starting from zero, as well as the identifying fast growth stocks. So the short break is for you to register. And next one, I'm going to introduce Fauzi, but let me just share with you the personal story before Fauzi came on board, right? I think, I also don't know how many years, maybe you need to ask Fauzi. So I met Fauzi a couple of years ago when he was an engineer. I'm not very sure is he an engineer today, but he was an engineer a couple of years ago, right? And then one of his passion as hobby, right, is to interview people to hear their stories and so on. So eventually we got connected online. Fauzi appeared in our office with all his gadget, his gadget about podcasting, recording, and so on. And then he came. So I think we spent about 1-2 hours together. Yeah, I think that's how Fauzi got to know about me, right? And I got to know about Fauzi. Yeah. Then after that, he fixed up his podcast. He sent me, okay, then can you please share and so on. So that's how we got to know each other. Then after that, I don't think I see him for a number of months. I'm not very sure, is it months to 1 year? Then one day, Fauzi appeared on the masterclass. Then I saw this guy look very familiar. Then I realized it's Fauzi. Then Fauzi joined our 4-day value investing program. So, the world is quite round. You interview, then suddenly don't know, you end up in this room. Then he would have finished his course maybe for about 1 year, 1 year plus. I'm just guessing. Later, Fauzi help me finish the detail. Yeah, so he finished the course. Then after he finished the course, we were thinking, oh, for this year, right, we want to introduce new things for our audience, which is for our grad. Then one of the new topic, right, is to see whether would anyone want to share their journey, like their heartache, everybody talk about, oh, I want to make so much money, but we want to hear the real life human story, right, about the journey. So we went round. So Adeline was the one who was being tasked to do this. So Adeline was thinking, is there anyone who is honest looking and don't mind share? So eventually, somehow, Fauzi appeared in our radar. Yeah, so Adeline reached out to Fauzi, and so on. Then Fauzi say yes. So we know that if Fauzi say yes, he can choose to say no. You see, so his time is involved preparing the slide and so on. Yeah, so Fauzi was really nice. Last time he interviewed me, now I interview him, but he own self interview himself. So he's going to appear, and Fauzi is really nice because we feel bad, right? Then we say, hey, Fauzi, is it okay we give you like a small token of appreciation? Then Fauzi say, no need. So what we're going to do, right, on behalf of Fauzi is we're going to donate this small token of appreciation to charity. So that is a very quick background of Fauzi. So, okay, let's put our hands together and welcome Fauzi. Yay!
Can you see my slide? Okay. In investing with other fellow graduates and also some other guests. Okay, so maybe I start with in a little bit of myself, my background. So I'm a chemical engineer, process engineer. So if you see in the slide right here, I designed this type of facility, is offshore platform where we actually track oil. So I spent that about 10 years, then another 7 years designing facilities or doing modification for facility like in those in Jurong Island, right? So then now I'm doing more of pre-sales for software. Okay, so that's my background. So in terms of before I doing VIA, right? So I think most of the time I don't really do much of investment. I do a lot of saving, and maybe through I guess through insurance. My investment is mainly through insurance or unit trust. So I buy plans, right? Then I guess then I back I think 3 years ago or 4 years ago, I started just a little bit buying a little bit of stocks, right? Okay, so then for me, before I joined VIA, what would be the most challenging part when it comes to investing? I think before joining VIA, I guess mainly is finding or screening or really finding a good stock, right? I think that's one of the challenge. Then I think yes, the next challenge is actually for me is one of the biggest challenge now is basically keeping myself cool or keeping my my mind still cool whenever, like for example, if either the market or the stock I buy goes down, right, or even going up, right? Sometimes this goes down, definitely I will feel maybe like panic, right? Or should I sell? Should I cut loss, right? Then also I think it also I feel it there's also maybe a danger also, like if even when things going well, right? I feel sometimes I can be overconfident and actually taking more risk, right? So okay, so then why I decided to start investing, right? So I like I just now I mentioned about I believe in saving, right? But I also feels like it might not be enough, right? I think we all know that inflation is actually also eating our saving, right? So I want to grow my saving, right? Of course, at the end, hopefully, I can have. I would say the ultimate goal is financial freedom, but at least some additional security, right? Also, to actually be able to send my children for their study later, right? Preparing for their study as well as for my retirement stuff. Okay, so I think the other things also is I see investment also, right? With I think with the option is also another source of income, right? So it gives me additional of I would say peace of mind, right? That you have something that I can earn money on the side, right? So that's something I like also. The additional cash flow also, right? Okay, so I think okay. So how do I think Cayden a little bit share a little bit already. How do I know VIA? I think you see these photos on the right. So that's me and Cayden, right? So I think back in 2016. So I did podcast back then. So I like to interview people, especially those who has overcome big challenges in life, right? It could be health, financial setback. I think Cayden very good story with the financial setback, and also the story about overcoming the cancer also, right? So I did interview him. I was glad I was connected by one of my friend I know, which also I think was the employee of Cayden Chang, right? Yeah, so that's how we met, and after that, basically, I follow Cayden on Facebook, right? So I think that 2016. So I didn't really decided to really actively investing. So I have some stock at the time, but not really active. Then I think end of 2019, I decided, okay, I want to start adding more, right? Taking more, trying to manage my own money more, right? Rather than other people manage through insurance, etc. Right? I want to be more involved, right? So that's why I decided to actually take the value investing course, the 4 days value investing course, right? Okay, I think, yeah, let me go to the next slide. Okay, so for me this is the photo. I couldn't find my photo when I joined at that time, 2020 January, I think 2020 January. So this one is when I participated as a coach in one of the VIA batch. So okay, so for me is I think the 4 days value investing, right? I really like the value investing. I think the Cayden goes through from the basics, right? How all the different financial statement, like balance sheets, income statement, cash flow, and also how to evaluate what factors to evaluate a good company, so how to value and ultimately build the portfolio, right? So I think it's very well structured, and I can see the passions in Cayden. I guess when I talk to other people also, many people say the same thing, right? You can feel Cayden's passion when teaching, right? And I think the other thing also I impressed with the team and Cadence. I think they have a lot of I guess strive for excellence, right? I always impressed with all the food, definitely, right? The food provided by the team for during our trading, right? Also all the book or the handout, right? Color printed, right? Okay, so for me is what is the most valuable lessons? I would say I think the identifying a good company and calculating the value, right? So that's, to me, is very important concept, fundamental, right? Buying a good and cheap stock, right? By good and cheap company, right? So in terms of the my take on value investing, for me is like one of my way to financial freedom, right? One of my way to generate extra cash, right? And I think especially if it's done earlier and consistently, I think that's really a viable way to make that happen, right? So for me is basically a sound. I think it provides a sound risk management. I guess is, to me, is everything comes with additional risk, right? So how we try to balance that risk, right? So like for example, having that making sure that the company is good, making sure when we buy there's a margin, and also having a good mix in our portfolio, right? So I guess for me is I still have a lot to learn also, especially managing or pricing my portfolio. Okay. Right. So in terms of investment itself, right? So when I graduated from the 4 days value investing program, so I did invest, not consistently, right? So this is just some of my investment. I definitely set the dollar tax. I think that's one of the to me is one of the very useful thing, right? You can see I set up, then I fund it, then I don't really fund it consistently. Only then after I think beginning 2000 last year again, I start funding every month. So now is I fund that every month consistently, right? For that to set aside, right, to buy index via dollar tax. Then this is some of my which I already closed the position. After which I bought, mainly this one is some of the stock is I bought after the value investing program, the 4 days, right? Still remember Johnson Outdoor is actually one of my case study during the value investing program. So I bought triple Q. I think this is like index for Nasdaq, if I'm not wrong, right? China Sunshine, Robert Half, right? Before value investing, I think Cayden also bought this stock. So when Cayden share, I just think then I just in my head, or I also bought that stock. Yeah, this one is I think my lesson learned also. So I bought this stock, then it's not so performing, right? But this is also before my value investing. So my message is also, I mean my message is we not everything will also win lah. So you can see definitely there are some which I didn't or lose money, right? Okay, so that's I think this is some of the stock which I bought after I graduated, right? So in terms of my current investment, so I invest maybe about 30% in Singapore and 70% and in US, right? So overall, I would say, especially my US, in general, is still below of my buying price, right? Especially some of the China companies I bought, right? With the recent event, the price went down, right? So having said that, I think I'm not too okay lah. When the price goes down, I cannot say I'm not worried. I'm definitely worried, right? But now I would say I'm better, right? So I would say I have some confidence in terms of okay, is because my portfolio is pretty much okay. So let me just rewind back. So I joined 2020, right? Then I also joined Project Never Work again. I think back in I forgot October last year, right? So pretty much, if you see my portfolio, some of my portfolio actually I actually changed. I sold out most of my stock, then refreshed, right? So my current portfolio is, I would say, it's like 5 months, 6 months old. So I guess still a long way to go, right? So for me is and for me is also the one thing I don't have urgency to sell. Then also I think with the options I can incrementally offset the negative, right? So that's what currently what I'm doing, right? So in terms of, so this is just some of my stock, right? So I Sprout Farmers, which I think I bought through put. I sell put at 22.5, right? I got then I sold call, so I think this is going to be exercise my call. Then Haverty Furniture, I bought at 30. Then I think not long after I bought, the issue special dividends. Now the price is also about 30, right? I have all states, very small amount of all stat. Then it's also doing quite okay, right? So for me is maybe it's not so much of what I list down here is I think what I would continue doing, right? So I see definitely investment is not something we can master overnight, right? I think a lot of that is also learning about not just the technical, but it's also learning about ourselves, right? So to me, is what I would continue doing is, one is I would stay engaged, right, in the community. So like you saw, like in the Facebook, we have the Facebook group. So we can always ask questions, we can read the posts, and we can evaluate, right? I think otherwise, it might be a little bit lonely, right? I think if you have a family member who are also passionate about investing, maybe is a different thing, right? But sometimes you can be also only you is doing the investment, right? Then I think for me also, I try to have a system or a habit, right? So value investing program, it gives you the tools, right? So like how to screen, how to values, then build the portfolio, right? So for me, it's like, I would just I follow the pretty much the same, right? Like for example, for me, it's like every month, right? Okay, maybe the other thing also which I like about investing is I don't have to sit in front of computer for wait to like watching the market all the time, right? So for me is most of the time I would start doing or start evaluating maybe 1 week before, around 1 week before the option expired date, right, every month. So then I would start trying to check, okay, where's the price and what's the intrinsic value. So that's typically what I would do, right? Then I will check the different options, how much below, then whether there is any earning calls whether any earning calls in the next 1 month, right, or in the next 45 days, right? So that's typically what I do, and I try to tabulate and calculate, okay, for this option, how much is the ROI, right? So from this, typically, then I have a list of kind of a plan when the option is expired, what are the things I want to do, right? So then after that, typically I sorted by ROI, which I feel maybe after a few times doing that, then I feel by doing that, actually I'm not, so I'm more focusing on kind of the highest return, but I'm not paying attention to actually the portfolio, how much portfolio, right? like for example, if if some of the put get exercised, then my portfolio can be maybe heavy on few sector or even few companies, right? Too heavy on few company. So that's what I feel. So maybe I need to be more careful about that. So for me is the other thing also recording my decision. So I especially for the options, I always put down all what are the price of the stock, what is the estimated intrinsic value, right? So how much is different at the time when I bought or when I sell the option, right? So the other thing I think, I would say also, I guess, admit and learn from my losses or mistake, right? And I would say is keep learning, right? I think through this session, right? And over time, I think we will have more confidence, or we have more knowledge and confidence in the value investing. Okay, yeah, I think that's about it. Sorry, maybe let me see. Yeah, so in terms of how value investing changed my life, I think now is one of my way of generating income, right? So basically the cash generator I just use also to buy stock again, right? So I think yeah, right. So I think that's about it. About my share. Yeah.
Okay.
Thank you.
Yeah, Fauzi, thanks, right? Thanks. But by the way, I would like to thank Fauzi again. And if you look at his slides right here, right? He shared quite some confidential information. But luckily he said that he already sold off, so he started his portfolio all over again, right? After he has attended the PNWA. PNWA, yeah. So thanks, Fauzi. Thanks, Fauzi. Thanks, Fauzi. So I'm going to take over from here, right? Thank you.
Thank you.
Thank you. So I am going to just make a very small, short announcement, Now, I've shared screen, right? Just to check with team members, are you able to see my screenshot? Yeah. Can see, right? Now, by the way, just to let you know that when Fauzi presented, I didn't know what is he going to present, what is he going to say. I didn't go and check the slides and so on. So I just leave it with him because it's supposed to be a sincere sharing, right? So just do a quick recap, Now, in the entire portfolio, as far as during the 4 days value investing program is concerned, our job is not to lose money. And to do that, we need to have some form of portfolio allocation. And during our class, we talk about 25% saving as cash. And cash is important because the stock market plunge and all this. If you put all your money into Alibaba or whatever, then it's a problem, right? So you always need to set aside some cash. So there is no perfect formula, but we use a rough guide, a blunt instrument. We say 25%, and then the rest is ETF. One segment is ETF. And during the class, we introduced one way of autopilot investing, and Fauzi was very nice. Fauzi said that here he do nothing. Like, can you see here? Yeah, here he did nothing, right? And it's only subsequently then he start doing. And remember, right? March was the point of time when the stock market plunged. Yeah, so I think one key learning lesson is if he would have consistently let dollar DEX pump in money here, right? Right now the ROI will be quite high. So he start putting money here. Here the market has already risen, right? But if you look at this part, he still make 6.74%. He still beat our CPF, right? And remember, he started late, He only started here. Yeah, but here check. So here ETF still make money, Still make money, right? But remember, very short term, right? Yeah. So ETF is for long-term investing, minimum 5 years. And he was quite nice. He talked about his portfolio. Here's Robert Half, right? Robert Half. So can you see here? He bought it at 50. He sold at 67. Now, just to let you know that just now I just checked, check my phone, right? Robert Half right now is 110. 110. I'm still holding on to Robert Half stock. Yeah, so right now it's 110, right? So he still make money, he still make money, right? Yeah. China's unseen, I think right now it's a bit flat. Yeah, flat, right? Oh no, China's unseen has 0.33, right? And then right now it's 0.49. Yeah, so here is okay, here is okay, right? And just now Fauzi was also very nice. He say like out of all companies, you cannot expect all companies to make money. So in other words, our portfolio management, right, is less wrong and more right. So in other words, our objective is to have less wrong and more right. So you realize that this one, he bought it at 2.2, right? But after he sold, it's 0.7. But the lucky thing is all the stocks over here, can you see? Here is 1, and then here 2, and then 3, and then 4, and then SFM 5, and HVT 6, and then here 7. So out of 8 stocks, right, 7 was positive, and then 1 is negative. And remember, we are not traders, right? So no monitor share price, and you know that we don't, how should I say, we don't have like buy software, that kind of thing. Yeah, and then he shared some very important, stay engaged with the community. We have been running this gathering since 2010, have a system, build a habit, record a decision. So I think Fauzi being a nice person and being an engineer, very meticulous. So you can see he even has his own Excel file. Can you see? Excel file. So here he unknowingly reviewed some stocks that he bought, like you see, UNM, right? UNUM, right? And then TD Synex. Okay, Okay, so yeah, so this is Fauzi, this is Fauzi, right? Now, this is just a Fauzi's journey, and in other words, his journey with us will be in about 1 year plus 2 years. 1 year plus 2 years. Now, for those people who are watching this video, right, there are about 238. Now, in case there are any one of you who are grad, you want to share your heartfelt journey, don't worry, I will not vet your size and all this, because it's your own story, you see. So if any of our grads, you are interested, right, to, how should I say, share your story, right, you can just email to Adeline@mindkinesis.com. Adeline@mindkinesis.com, right? Yeah. So Fauzi already done his sharing. Now, so just to let you know that out of the 237 of you, I'm not very sure how many of you are not our graduates. Yeah, so at least you know this is what we do on a monthly basis. You want to encourage each other, right? Now, so in case some of you are not our value investing program graduates and you're very curious in what we do, how Fauzi got started, how come there's a systematic approach, and out of the 8 companies invest, 7 companies do well. Just to let you share, just let me share with you a piece of good news. Now, the piece of good news is on the 23rd of March, which is on a Wednesday, right? As well as on the 31st of March, on a Thursday, right? We have an on-site masterclass because right now the economy has opened up, the multidisciplinary task force, we are so-called open up. So we are running classes on site so that I can talk to you, you can talk to me. Yeah, on site. So we are going to run an on-site masterclass where we share with you more in detail what we do, how to build a portfolio, and so on. Now, so just for those people, again, who are watching this, right, in case you're not our graduate, let me share with you some good news. But if you are a graduate, please don't come. Please allow the seat, right, to be given to our non-grad. So at the reception, right, we will share with you a step-by-step guide on how to invest in STI, ETF, Autopilot. And remember just now, Fauzi was talking about the dollar DEX. Yeah, we also pass you a hard copy, a printed hard copy, right, on how you can get started, modeling, after what Fauzi has done. Yeah, so we're going to give you a hard copy, not ebook, right, hard copy guide. So the moment you're reception, yeah, we will give this to you. Now, just to let you know, because there's a limited seat, right, for our master class, it requires a small investment of $8. But don't worry, I'm not going to collect these $8, right? Every single cent of this $8 goes straight to National Cancer Center of Singapore because I'm an ambassador for them, right? And my tenure will end next year. So my job is to collect all this small amount, eventually to help them raise 150 million, right, by end of next year. So $8 out of 50 million, you'll take forever, but I do what I can. I do what I can, right? And then for your kind donation, other than the 2 hard copy, we will also give you a hard copy book, which is our national bestseller. And the title of this book is called Investor. Right now, Kinokuniya is selling at $33. So $8, we give you a hard copy book. Hard copy at $33. We also give you a Starbucks gift card. And if you're non-grad, right? So in other words, you donate $8, we give you something $63 in return, and your immediate ROI is 688%. Oh, just one more thing, right? for the book and the Starbucks gift card, you will be given at the end of the class, because we don't want you to come take a book and then disappear, right? we want you to learn. So as a side benefit, we give you this, you see, at the end. So reception, 2 printed guide. End of the session will be the book and the Starbucks gift card. So Starbucks gift card, we really pay $10 to top up the $10 in the gift card so that we can give it to you. And of course, for this March only, we also give you a copy, right, of our Value Investing Simplified. Yeah, so you add together, it's really worth $63, hard copy, because ebook is not so valuable, right? Yeah. So what will you learn if you are not our value investing graduate, right? Yeah. So the masterclass takes place on 23rd and 31st. And oh yeah, I'll just need Adeline, right? Adeline, can you just post the link? Yeah, so that for those people who are non-grad, right, they can register register, right? Yeah. So what will you learn on these 2 evening, right? So you learn how to generate 3 sources of passive income. And just now, Fauzi has already shared, some of the income, the stocks, and so on, right? Even if you know absolutely nothing about investing. And of course, Fauzi has shared that he started off being an engineer. It's not really finance background. And you learn how to invest in minimal capital. The dollar decks that Fauzi has spoken about, 1 month is $100 minimum. This system driven. And of course, the last one is, you notice there's a 1 or 2 line he talks about selling options, right? Yeah, so we will also cover this. Yeah, cover this. So 1 evening to cover all this really is quite intense. It's quite intense, right? But as a reward, we give you the books and a Starbucks gift card. Now, so again, right, these are the 2 dates. Our team member colleague Anthony has already posted the 2 links. You receive these 2 guides at the reception, and at the end of the masterclass, we will pass you 2 books and 1 Starbucks gift card. So remember, your guaranteed ROI is 688%. Okay, so the 2 link is there, and these are the things that we're going to cover, I think so. Right now, right, we are almost going for a short break. Maybe I think maybe 6 minutes will do 6 minutes will do, right? But before we go for a short break, let me share with you what is going to happen after a short break. Now, my part, right, I'm the last speaker for this evening session. Is going to be quite short, maybe about 15-20 minutes. Now, for the past few months, it has been quite interesting because the market overall, right, is experiencing some form of correction. For example, for the S&P 500, let me just write down S&P 500, right? It has dropped about negative 11% from the recent high. That means from recent high to current, drop about 11%. Now, with the Russia-US conflict, with the rising inflation, I'm not very sure whether the market will collapse further. And our job is not to get share price. Yeah, our job is to find a good company and then buy at the cheap price. Yeah, and then it's just by chance within our grad close group, there was one post, right, talking about Foot Locker, right? So I noticed that Foot Locker, from the recent high, which is the 17 May, which is maybe 8 months ago, right? It has plunged from this number to the current share price of 29.8. Yeah, so the price has fallen by 50+%. Yeah, so of course the question is, as a value investor, right? When you see the price fall, and Fauzi has nicely put it, initially you may panic and so on. So now the key thing is, how do you take advantage of this? Yeah, there are a few questions, and I'll answer this after the break. So the first question is Foot Locker still a good company? Because value investor, you want to buy a good company at a cheap price, right? Then the second question is, if Foot Locker is a good company, as of now, you look at the price, is it a good price to buy? So number one, we have to establish, is Foot Locker is a good company. Second one, is it a good price to buy? And the answers to these 2 questions, right, will be answered right after this short break. So in other words, after a short break, I will do a brief analysis about Foot Locker. Yeah, so that all of you who are watching this, whether you're grad or non-grad, you know what's happening. I mean, why the share price plunged 54, right? Is there something wrong? Okay, so that will take place after the break. So for those people who are not our graduate, you can see the 2 links over there. You can click on the link and then register for a masterclass. And then, of course, you learn the system that Fauzi has said. So with that, I think the timer 6 minutes will start down. And then 6 minutes, when I come back, I'll talk about this company called Foot Locker. Okay, great. So I see you later, right? Hi, ladies and gentlemen, welcome back. I'm sharing my screen right now, right? And don't worry, my part will be quite short so that you all can have a good rest. So if you look at the slide right now, it shows a Foot Locker, the share price has plunged by 54.7% and so on. So maybe before we deep dive right into Foot Locker, maybe I want to ask a question. So I need your help to participate, right? Now, so I think most of you, if you are located here, right, in Singapore or some parts of the world, you would have heard before this company called Foot Locker. Foot, you know, our food, right? Yeah, Foot Locker. So maybe I need your help to just type in your very, very quick answer, right, into the chat box of YouTube. Now, my question to you is, what business, right, do you think Foot Locker is in? Yeah, what business? What do they do for a living? Yeah. So for example, is it selling shoes or whatsoever? So it's okay. I let you, spend a couple of seconds, right, to just type out the answer. So what business Foot Locker is in? Now the reason why I ask this question, right, is because if we want to answer the question is, is it a buy right now? Is it a sell right now? Am I right to say that you need to know what Foot Locker is in? Yeah, but right now, as far as the past 1-2 years is concerned, right, I've noticed when people want to buy something, right, they just look at some influencer YouTube video or TikTok video. That's quite dangerous. Yeah, that's quite dangerous. For example, if you want to buy a refrigerator or buy a laptop, I think it's common that we want to check reviews. This laptop, what laptop is good. Maybe you want to watch a YouTube video, what laptop is good, and so on. So I think even I myself do it. But ultimately, when you read a lot of reviews, right, and then you go to the shop, you also must understand the review, does it make sense, and then make a choice. So one laptop, maybe right now, 800 to about maybe 1,000 plus, you can really buy a laptop. Yeah, but buying stocks is different. Yeah, buying stocks, people, I don't think they spend 1,000. Sometimes they whack 10,000, sometimes they whack 20,000. So can you imagine buying a stocks, right, and you're going to put like 10,000, 20,000. That's many times more than a laptop. And laptop, you try to spend time trying to figure out what is it all about. So along that line, if we have some sort of correlation, am I right to say that before we buy the stock, we should intensify, right, to know about what this company is all about? Yeah. So for example, what business is Foot Locker in? So as I look at all these answers, everybody sells shoes, sports apparel, buy shoes, sell shoe, apparel, and so on, right? Angeline distribution, limited edition. All the answers are correct, huh? Then as time passes, I'm going to share with you what business is Foot Locker truly in. So let's get started. So this is a disclaimer. So usually I will read word by word, but I think I will spare this. I'll just read the last sentence, right? So remember, neither my Kinesis Investment, VIA, nor author, which is me, okay, are operated by or affiliated with any broker and so on. So in short, I'm just sharing with you my thoughts, so you all don't whack me, right, and then go YouTube and then hate me, At this phase of my life, I think I don't need such things, Okay, got it? So okay, disclaimer, can you please do a screenshot and then put it as a wallpaper in your phone? Okay, let me get started. So all of you are correct. Foot Locker, they actually sell sports apparel, right? Sports apparel. So you can see this photo is taken out of the annual report, right? And then if you look at their purpose, right? Remember, their purpose is not to sell shoes. Their purpose is to inspire and empower youth culture. Wow, sounds like a big thing, right? So in other words, their purpose is to inspire youth culture through the things that they are selling, which is the shoes, right, and apparel. Of course, we can always inspire youth culture by various things. Yeah, but they are just trying to inspire through their shoes. And of course, if you look at the mission, right, do you realize that their mission doesn't include the word shoes or sports? You see, shared passion for self-expression. They didn't say about shoes, right? They didn't talk about Nike, right? And then here, you look at the vision to create unrivaled experiences for our consumers. Now, take note of this, unrivaled experiences. Later, I'm going to connect the knot, right? Yeah. So in the early days, when I work for a company, I don't really pay attention to vision and mission. That's what the CEO usually thought, but it's like too far away from me. So usually I don't pay attention. But I want you to pay attention for this one, unrivaled experiences, which means that in order for Foot Locker to compete with Nike, Adidas, whatever, right, they have to explore strategies or methods to create certain experience so that when they enter the environment, they know it's Foot Locker and not Nike. Okay, so take note of this. And then this is the part where the shoe comes in. How do we position ourselves? We want to be at the heart of sport. Remember sport, right? Yeah, because there are many types of shoes. For example, when I was doing research, there are some shoes related to outdoor, but they are not competing in that realm. They're talking about sports, sports, right? And they're talking about sneakers, okay? Sneakers, not boots, right? Not boots, So take note of their positioning and take note of their bigger vision, right? Is to create the unrivaled experience. And later on, the things that they'll do, we will try to connect the dots, So this is our Foot Locker, right? Yeah, so just very quick overview. So Foot Locker's ticker symbol in the New York Stock Exchange is FL. Yep. They are a retail shop selling, remember, right? They're selling shoes, but sports shoes, not the outdoor, camping shoes, right? Sports shoes and then sports apparel, right? These are some detail, but this is the most important. Now, as of 29th of January, which is very update as of this afternoon, there are about 2,858. Later on, I'm going to come back to this 2,800, but just briefly, they operate retail shops, sells sports, sports shoes and apparel. And we must understand that under Foot Locker, they have many brands. Now, there's a list of brands, so don't worry. Later, I'll show you some pictures, right? Pictures. So they have sports shoes, right, which relates to athletic stores. And let us have some visual. So you see, in Singapore, I don't think we have this, but in US, they have Foot Locker, but it's for kids. And then they even have a Foot Locker for ladies, And then under the overall Foot Locker, right, they also have other brands such as Champs, such as Foot Action, many brands. Runners Point, Sidestep, 6. So in case you travel, you see any of this, they belong to the broad umbrella of Foot Locker, okay? So where are their business? Now the business is really a lot. You see, US, right? US, they are 867, Europe, and so on. I'm not going to read out all this. You can have a quick glance. So from here, right, you roughly know where they are. Then these are the brand name, right? So total as of 2020, right, they have about 3,129 stores. But remember, as of this most recent one, right, can you see? The stores count actually has dropped from 3,001 to 2,998, about 3,000. So now the stores has dropped. So now the key thing is, if you're a business owner, right, or you park your money into a business, and then you realize that that store keep closing, year after year keep closing, you also panic, Panic, right? But don't how should I say it? Don't jump to any conclusion first, because sometimes when people close shop, it doesn't mean that's a bad thing. And later I'll share with you why, right? But initially you may have this, okay. So you see, right, in 2020 from 3,001, then become 3,000, then 3,000 become 2,008. So instead of having more and more stores, they are having less and less retail shops. So is it a good thing or bad thing? Now remember, the decreasing number of stores may not represent the decreasing number of sales. So the key thing is, when you look at the decreasing number of stores, you may like, your heart skip a bit. But let's look at the amount of money that they bring in, even though the stores has been decreasing. Now, this is the number of stores, and the stores indeed have been decreasing, right, from 2017 to here. So if I add another latest bar, right, it goes from here to here. So here, panic, right, because the number of stores drop. But let's look at the number of sales. When the number of stores get lesser and lesser, how about the sales? Does it correspond to the declining number of stores? Now, this represents the revenue, not profit. This represents revenue, right? Revenue, that means the number of sales. So if you look at the declining number of stores, but the interesting thing is the amount of sales has gone up. This is the absolute number. Yeah. So at the back is million, right? Six zeros at the back, Yeah. So here is actually 6 billion. But anyway, just look at this, 6,001 and 8,009. Yeah, so it's a consolation, right? Because ultimately, is if the number of stores is decreasing and then the amount of sales that is increasing, you can safely conclude that on a per store basis, right, the sales will have gone up. Yeah, and then those stores that are closed, I just presumably they are not money making. So if they're not money making, it's better to close the store, right? And then let the money making one, be around. Yeah. So you realize that the revenue is go up. So I think no need to panic. So number one, this looks good. And based on value investing philosophy, we always want a company to have growing revenue. Yeah. So this one I think will be a pass. So now the question is, if the revenue, right, is vanity. It's vanity. So we want to look at profit. So profit is sanity, right? Sanity. So there are many ways to look at profit. One way is to look at this earnings per share. Earnings per share means if you buy one share, what is the profit. Okay, NRI stands for non-recurring item. That means we don't want those profit, one time. Yeah, we want to remove those, and then we only want to look at those numbers that's excluding the non-recurring item. So if you look at here, right, we start off here, which is 2.58 over here, and the most recent one is 8.61. And you realize that during the pandemic, which took place in 2020, the lockdown, all this. So let's get real, right? So retail shops do get affected. But fortunately, I think with vaccination and all this, things get a bit better. So from first point, 2.58 to 8.61, right, the compounded annualized growth rate, in short, it's like an annual increment, right, of our salary. But this is the annual increment of their earnings per share, has been growing. So now it goes something like this. Every single year, it goes at 14.3%. Yeah, it's not a fast growth. Yeah, it's not a fast growth, it's not a slow growth, so it's a medium growth. And remember, right, this is excluding dividend. So dividend usually is about 3%. So if you add up, maybe it's about 17%, 70%. But let's focus on this 14.3%, right? So at this slide, what I'm trying to articulate is it is a medium growth company. It's not a fast growth. Fast growth, you have to look at the ETF cost, right? And then it's not a slow growth. So let's talk about future plan. And then later on, I'm going to explain why the share price dropped, right? Now, share price drop. Now, this is extracted from their latest quarterly report, which is really fresh out of the oven. Now, let me share with you something very important. I'm going to underline, right? In the future, moving forward, from today onwards, so Foot Locker, right, does not expect one vendor, right, to represent 55% of their total supply spend. Now, later on, once I flash out everything, right, I'll explain to you the context. Now, Foot Locker, if you go inside a Foot Locker store in Singapore, and you just roughly gauge, I think about 70%, right, of the shoe rack has one brand, and the brand is called Nike. Brand Nike. So I want you to imagine that if you're the owner of Foot Locker, your 70% of the money comes from Nike. It's quite dangerous, right? Yeah, because the Nike may twa you, right, may sabo you, and then say, one day I don't want to work with you anymore. Well, then your 70% of your store profit all gone, So if you are Foot Locker, if there is one thing that keep you awake at night, is your life and death is relying on one brand, and the brand is called Nike. And you have no idea when Nike will sabotage you, right? You have no idea. So do you see what Foot Locker is doing? Foot Locker know that their life and death is depending on Nike. Can you see here? 2020, their life and death, 75% rely on Nike. 2021 is 70%. So do you realize that as the years go by, they want to reduce from 75 to 70, 70 to 55. So right now, you have to ask yourself if right now you're less reliant on Nike. Yeah, is it a good thing or a bad thing? Okay, so maybe I give you 5 seconds. Can you just type inside the chat box? Can you tell me if you're the boss of Foot Locker? Right now, you are less reliant on Nike. To you, is it a good thing or a bad thing? Because previously, 75% of your bread and butter comes from Nike, right? Right now, it's only 60%. And in future, you want it to be less and less reliant. So right now, you just need to type, is it a good thing or a bad thing? And then I'll just continue to speak now. Just type inside the chat box, if you're Foot Locker boss, you're less reliant on Nike, is it a good thing or a bad thing? So moving forward, one key thing is they want to have less reliant, so that they won't kena neck choke right by Nike. So of course, Nike is the key person. So now the key thing is why Nike's Foot Locker cutback could devastate other retailers. So the moment Nike announced that they are going to have less reliance on Foot Locker, and Foot Locker also announced that they are going to have less reliance on Nike, right? These two somehow the market, right, perceive as a bad thing. Perceive a bad thing. And because it was being perceived. Now, perception is a bit different from fact. And because the perception is bad, right, this Mr. Market punish by selling the stocks. So it goes from $41, right, to $29. And this is very recent, This is somewhere in February, right? Yeah. So the most recent one, the share price dropped by a negative 27%. And if you compare to the most recent high, it drops by 50. Either way, recent high drop by 50, the most recent is negative 27. So if you bought a stock here at 41, right? 41, like what Fauzi is saying, why, you naturally panic, right? Yeah. Even though you have taken, I can assure you, even though you have taken whatever course, you read every single finance book on the library. The library didn't tell you how to handle this. which means that if you have read every single book about swimming, it doesn't mean that you know how to swim. Yeah, so the share price has plunged by negative 27.9, right? But what does it mean, right? What does it mean? Now, so what I'm going to do next, in the next couple of seconds, so there's some answers which is okay, right? So I'm going to play a very short video, right? And this video is Buffett, right? So Buffett is trying to explain when a share price fall, what does it mean? Yeah, so if I reassure you, maybe you don't feel reassured, but if Buffett reassure you, maybe you have some reassurance. So I'm going to increase my volume, right? And I'm going to share to make sure there's sound. So I just need a team member help to see whether there's sound. So I'm going to click and then I'm going to get started, right? Ready? Ready? So when there's a price drop, what does it mean? Through the perspective of the best investor of all time. So here it goes.
Certainly most of the professional investors focus on what the stock is likely to do in the next year or two, and they have all kinds of arcane methods of approaching that, but they do not really think of themselves as owning a piece of a business. The real test of whether you're investing from a value standpoint or not is whether you care whether the stock market is open tomorrow. If you're making a good investment in a security, it shouldn't bother you if they close down the stock market for 5 years. All the ticker tells me is the price. And I can look at the price occasionally to see whether the price is outlandishly cheap or outlandishly high. But prices don't tell me anything about a business. Business figures themselves tell me something about a business, but the price of a stock doesn't tell me anything about a business. I would rather value a stock or a business first and not even know the price.
My apologies for the scribble, right? Now, Warren Buffett has shared something very, very important. Let me just do a quick recap, right? Now, the price don't tell us anything about business. So here, if you look at the price all day, right? Now, when a price drop, it doesn't tell us anything about business, whether is it a good business or a bad business. And then, of course, he carried on by saying, only a business will tell us whether is the business a good business or a bad business. So what does it mean by this? So remember, right, the price doesn't tell us anything about the business. Doesn't anything. Only the business will tell us something about the business. So in this case, right, what does the business tell us? Now, this is the net income. Revenue is vanity, right? And then profit is sanity. Now, if you look at the net income, do they go through hard times? Obviously. 2018, they go through some hard times. The pandemic over here go through hard times. But if you look at it in the long run, do you realize that the profit is still okay? Still okay, So in ours as investor, remember, price tells us nothing. But the business tells us something. But then the question is, if out of curiosity, right, even though price tells you nothing, but why did the price drop, right, even though the profit goes up? Does it make sense? Okay, So I just want to let you know how market respond is. When I say market, right, most people who buy Foot Locker stocks or whatever stocks, most of them are not investors. And because most of them are not investors, they tend to overreact to certain event, and then they tend to be very forward-looking. When I say forward-looking, right, that means they start counting the eggs even before they're hatched. And then the eggs can be a good egg or bad egg. In other words, if the eggs are good, before the company make money, they already jump in and then push the share price go up. And then if the eggs are bad, right, maybe only one or two are bad. But they start to extrapolate, oh, it's going to be very bad. Yeah, very bad, So this is how the stock market will overreact. And if you look at this news, which is on the 25th of February, right, Foot Locker share sink. Yeah, this article attempt to explain, right, after the retailer, which is Foot Locker, says this year's sales will fall as he expects to sell fewer Nike products. So I suppose because they are cutting back their reliance on Foot Locker, right, from 70% to 65 to eventually 60 to even 55. So this will hurt the sales. Remember, it hasn't taken place yet. But because the market is very forward-looking, it hasn't taken place yet. Before that day come, I think I better cut loss and sell with the stock. Yeah, which is why the share price fall. So now the question is, if I'm the boss of Foot Locker, right, you put money with me, and I tell you upfront, hey, this year, I'm trying to manage your expectation, right? Then I say, hey, this year, my company is not going to do so well. Then, of course, the next question that you're going to ask me is, hey, you already know it's not going to do so well. What are you going to do about it, right? Because my money is with you. Yeah. So if I own Foot Locker stock, my next question is, hey, I got some stock that's stuck, right? Right now the share price plunge. Are you going to do anything so that eventually the share price will go up? Now, so let's look at what a Foot Locker is going to do this year, since they already know that the sales is going to drop? So there are 4 things that they're going to do. First thing, remember, right, they are having a less reliant on Nike. Yeah, so if they are cutting back on Nike, then how is it? Then should I sell other people's brand? So pay attention to this. Their first strategy, right, is to diversify merchandise, of course, beyond Nike. So what are they trying to sell, since my rack is going to have less Nike shoes, right? So they're going to put more to using Reebok. Okay, less Nike, but it's okay. I'm going to put more Reebok, right? So next thing is I'm going to do more Puma. Okay, so this is what they're trying to fix. Now, knowing that the sale is going to drop. And then not only that, right, they are going to open more malls. More malls. Now, later I'm going to explain what is this power store, right? It's the term that's coined by... So in ours, they have about 2,900 stores, but they want to have more of these power stores. Up to 300 locations. That means they want to add 300 more stores. And then they have acquired this one called WSS. Now, WSS, just to let you know, that is a athletic retail giant, right? Which is called a Eurostar. And then they also have acquired another company called Atmos. Here. Now, just to let you know that this Atmos is a Japanese sports retailer. So in other words, hey, I'm relying less on Nike. So I can imagine my rack originally got 70% shoes, right? Same short string. And then now my rack become empty, right? Empty, I better put in more. So what am I going to put in? Yeah, I better put in more Reebok, put in more Puma. Okay, so this one, to make up for my projection where the sales is going to drop, right? And since I already know, I think I better acquire more stores, right? So they acquire Eurostar, more stores, more revenue, right? More profit, and then Atmos. Yeah, Atmos. So one more time, right? This is what they're going to do in the future to make up for their projection that the sales may slow down. So remember, they're going to diversify, Reebok, Puma, right? Open more stores. Yeah, they have already acquired all this. They want to keep growing, right? Keep growing, Yep. So let me just share with you how power stores look like. I don't think there are any power stores in Singapore. So let me share with you what's power store. In future, maybe. Now, power stores are stores, right, that are 4 times bigger than the store in malls. So if I look at those in Suntec or in Jewel, right, I don't think there is one that I see is 4 times bigger. Yeah, but they have it in US. And the interesting thing is, other than size, so to them size matters, right? And the key thing is, can you see here? I mean, if they make it big, so what is it? So they want the stores not only to be big, to be interactive. And if we go back to the very first slide where they remember what the vision is to be interactive. And to be interactive, right, they want people to immerse in a certain environment because the culture, right, the sneaker culture, right? Yeah, so this one, and WSS, just now we say acquire WSS. Remember, their name is also known as Warehouse Shoe Sale. So it's WSS, okay? National Retail Chain, 92 outlets, and so on, right? And then this is the Atmos. Atmos, not very big. It's a Japanese, right? Can you see it's a Japanese character, right? There are 49 stores. Yeah, so that's how they expand. They can expand by opening stores, or they can expand by acquisition. Yeah. And so now, back to the question I asked. So what business is Foot Locker really in? Now, I don't mind sharing with you that I bought Foot Locker many years ago. I can't remember which year, right? I think the share price that I bought was, I think, about 40, right? So maybe let me just write it down. 40, right? Yeah, after I bought it at 40, I think maybe 6 months down the road, because there's one earnings who didn't meet estimate, right? So the share price went from 40 to I think about 30. 30, so negative, maybe 25% drop. Yeah, 25% drop. So what I did was I just sold call. I just sold call because remember, price tells us nothing about the business. So I need to look at the business so that the business tells me something about the business. So eventually, at that point in time, I felt that there's nothing wrong. So I hold on. Now remember, I would have cut loss if I know nothing, or if I assume that the price tells me something bad about the business. So I hold on, but it took me quite a while, maybe 9 months or 1 year, right? So the price goes from 30 to about 53. And I remember 53, right, because I saw a call option here. So the share price actually went beyond 53, went to 60 plus. Yeah, I was like, yeah, I should have. But anyway, it cannot suck thumb, right? So it went to 53, so I sold off. So I sold off. So from 40, right, I make about 13 bucks. 13 bucks. So I just estimate maybe about 30%. 30% then in between I collect some premium. So I sold at 53. Then after I sold at 53, it went up to 60 plus, and then the share price dropped again. That's when I bought it back. But I didn't know that when I bought it back, the share price dropped further to 29, right? 29, Yeah. So remember, Foot Locker, yes, do they sell shoes? Definitely. What kind of brands? I think you will know. But remember, Foot Locker is actually in the distributor business, disguising itself as selling shoes. Now, which means that if you ask yourself, what business is McDonald's in? McDonald's is in a franchise rental business, right? Disguising itself to be selling burgers. Because they make most money, right, from rental and royalties, and not from selling burgers. Yeah, so they are in a rental business. Yeah. Then we must understand Foot Locker, right, do not have their own brand of shoes. Yeah, you don't see a shoe with a Foot Locker, right? And initially, when I went inside Foot Locker, I want to buy a T-shirt with a Foot Locker, but I realized I don't have. So I felt tempted to ask the staff, if you don't mind, can you sell me the shirt that you're wearing? But I think they'll give me a tight slap. Yeah, so I don't have the guts to ask. Yeah, so eventually, I think I couldn't buy Foot Locker shirt. So if you go inside the shop, you realize that they don't really have their own house brand as of now. In future, I'm not sure. As of now, don't have. So what they do is they acquire, they got different brands, right? But no brand is Foot Locker. So what they do is they are in the distributor business. Now, and let me show you some facts to support this opinion, right? Now, this data, right, was dated back 2018 when I bought my very first Foot Locker stock. So I've been like following Foot Locker for 4 years already. Yeah. So during those time, Foot Locker has all this number of stores. Yeah. So I was asking myself, Foot Locker highly reliant on Nike, right? And Nike, passed like 70%. So how should I say? Foot Locker, right? 70% of their revenue comes from Nike. Yeah. So I was a bit concerned because most of the money comes from Nike, right? So what I did was, it happens that one of my friends worked as a sales manager in Nike. Yeah, so I gave him a call, right? And I say this, I say, hey, Foot Locker make most money from Nike. So I asked him, hey, do you think, at least from your opinion, do you think Nike will cut off this relationship from Foot Locker? He didn't answer me. So he said, if Foot Locker is helping you to distribute, and then if Foot Locker has 3,000 stores, right, and then Nike has only 1,002. So he asked me back the question, do you think Nike will cut off the relationship? I mean, my answer is no, because if I cut off, then I lose 3,000 stores to distribute, you see. So my answer is no. But I think in the long run, Nike really is preparing for this cut off. And Foot Locker see it coming. So let's see what's Foot Locker doing. Now, Foot Locker, remember, he has 2,885 stores, right? And remember, their business is the distributor business. So if they are a distributor business, the first thing you want to see is the management make good decision, right? By having more distributor stores. So remember, if you compare to the rest, Nike has 1,000. So far, this is 3 times more, right? Yeah. Adidas has 2,005. This is the latest, I can get, right? So, yeah, all this data, okay, And then the Foot Locker is going to add 92 more stores, and from WSS Eurostar, and then 49 stores in Atmos. So in total, right, they are very quiet. So in total, right now, they should have about 3,000 stores. Yeah, and it's 3 times larger than Nike. Yeah, so my opinion, remember my opinion is not fact, right? The 3,000 store is a fact, but I form my opinion around the fact. So my take is, unless Nike can increase their online sales so much that could overtake the extra 2,000 stores that the Foot Locker have, yeah, then that could possibly hurt Foot Locker. Yeah, so this is one possibility. The second possibility, right, is the management of Foot Locker screw up. In the sense that now they increase stores, I suppose they also want to increase their online sales. Yeah, if they are doing both, I think the mode should be preserved. Yeah, and I'm not very sure, right, whether is there some secret agreement that Foot Locker cannot work with Adidas. Yeah, the reason why I said this is, can you imagine that Foot Locker has 3,000 stores? And if Foot Locker replaces Nike with Adidas, 2,500 stores, then they will become the largest. Yeah, but all these are question mark because if Adidas got 2005, why would I need your 3000, right? Yeah, and it's because Nike has 1000, so I need. Yeah, so I think as of now, a Foot Locker and Nike could be a symbiotic relationship until such time that they try to, Nike try to build its own stores and then Foot Locker try to replace Nike. Yeah, so how long this thing is going to work, I am not sure. But let's look at some numbers because right now all those things that I say are all qualitative, right? So let's look at the number whether does this Foot Locker has an economic mode. Now, in our value investing program, there are two ways to understand whether a company has a strong mode. So one way is to look at the ROIC. ROIC stands for return on invested capital, which means let's say this number is 23. What does 23 mean, right? It simply means that by the way, this is percentage. Yeah, percentage. What does it mean, right? It simply means that if I put in a capital of $100, my return is $23. Yeah. So of course, if that's the case, you want this to be as high as possible, right? Yeah. Yeah. So this one way, return on invested capital. So what is WACC? WACC stands for weighted average cost of capital. Now, all companies, or maybe I shouldn't say all, most companies when they grow, they require some form of borrowing or some kind of debt. So in order for them to borrow capital, there is a cost. So this is like interest. So if they borrow $1, of course they want to make $5, $10. Yeah, so that the return is higher, right, or can cover the interest. So in other words, we want this ROIC, right, to be bigger than WACC, not only in 1 year but consistently over time. So this graph is over 10 years. So you realize that this line, right, is always bigger than WACC. WACC is at the bottom, right? Yeah, and you realize that in the last few years, it's quite competitive, And then over the course of pandemic, it really affects them. Yeah, so it touches. But the good news is it's widening again. So what we want to see over time is if you're concerned about Foot Locker, right, you need to monitor all the numbers. ROIC must be bigger than WACC. So far so good, So far so good. Yeah, with all this line, right? But never mind. Now, so what I did was I looked at comparison. Okay, sorry, maybe I escape first, right, so that I can remove this line. And then I'm going to share the screen one more time, right? Yeah, to make sure that you can see. Okay, good. Now it's cleaner, right? My apologies. Now, so I wanted to look at the competitors. Yeah, so Foot Locker, Skechers, Deckers. Remember, Deckers Outdoor is not really a direct competitor because Foot Locker is a sports apparel, right? But it's okay, I just put it in. Nike, Adidas, the rest are more close. So remember, ROIC want to be bigger than WACC, right? So what I did was I calculate difference. This minus this equals to this. Yeah, so when I look at here, right, every company has some form of economic mode. Yeah, the numbers, if I put this aside, right, Skechers, not bad, the number is quite big, right? And then Nike is really have a very big mode. Yeah, so all this has an economic mode. But we must understand, right, Skechers, Deckers, Adidas, all this, they're selling their own brand using their own retailer. And then Foot Locker, right, is a distributor. Yeah, so that's the difference. But when I look at this, what can I conclude? I think Foot Locker still has a mode. Yeah, so right now I own some Foot Locker stocks. And of course, when the share price plunge, like I'm holding to some stocks which are like 20% plus away, right, from my original purchase price. Number one, I don't really panic, not because I'm like super steady like Warren Buffett and so on, right? Partly, number one, I know the business. Yeah. So once I know, I don't need to overreact. So that's one, right? The second thing is the number of stocks that I own as a percentage is less than 10% of my entire portfolio. So do you realize that I'm practicing what Foot Locker is doing? I have less reliance on one single company. Right? So this is very important, This is very important, right? Just now I just happened to see one post in our closed group. There's this guy who talked about Alibaba, and Alibaba share price really dropped a lot from $300 to right now I think it's 88 or 89. So it can be quite scary, right? So I also own Alibaba. My average purchase price is about $150. So it doesn't mean that when I bought it at 150, right now it's 88. I'm feeling good. I feel good. I'm feeling okay, but I don't cry over that spilled milk. Again, my fortune, right, has less reliance on Alibaba, which is less than 10%. Yeah, so during the 4 days, it's very important to have some sort of asset allocation, right, so that we do not put our reliance on just one company. It's very dangerous, Yeah. So coming back to the question, right, a negative 54.7%, right? So now the question is, can buy or not, huh? Cayden talked so much, right? So the ultimate question is, Cayden, right now the share price plunge. Looking at the economy of all this, it appears to be a good company, right? So right now, can buy or not? There are only two questions, huh? Can buy or not? So what is the answer? Maybe before I tell you the answer, right? Now, we have about 259 people watching this. Now, maybe I just want to hear your opinion before I share mine, right? Can you just, I give you 5 seconds, can you just type your answer, can buy or not? Just type yes or no. Yes, that means to you, I think can buy. No, that means don't want to buy. Don't want to buy, that means you wait. So maybe let me just hear from you before I share my own thoughts, right? Okay, so usually YouTube is a bit like lag, right? But it's okay, huh? So right now, come. Elwin might say any view on PayPal. Maybe I can do this. Maybe this one I can do it another YouTube live. PayPal, huh? Okay, so can buy or not? Okay, can buy or not? James, I shall wait. Remember there's no right or wrong, huh? But by the way, this is not a voting contest, right? Investing is not a voting contest. You don't get count, and then realize the majority say buy, then you can press buy, huh? So remember, investing is not, so the rest say wait. Okay, ready? I'm going to share with you my thoughts. Remember, my thoughts, my opinion is not a fact, right? It's not a fact. So, all opinions are correct. And nobody has a monopoly of opinion. So, ready? So, Foot Locker, can buy or not? Yes or no? This Jumping say Chong, this is quite a dangerous person. Okay, so can buy or not? Ta-da! Okay, I will not tell you the answer. To know more answer, right? Especially for those people who Lemon, the debt to equity ratio is quite high, but we have to see in detail, right? The high debt to equity, is it really due to the debt, or is it due to the reclassification of the debt? Yeah. Okay. So again, if you want to, if you are non-grad and you want to know whether Foot Locker or any other companies is can buy or not, remember on the 23rd of March we have an on-site masterclass. I'm just going to repeat one more time, right? And $8 investment, and it goes to charity, right, which is National Cancer Center of Singapore. By the time you reach the reception, right, we will give you 2 printed guides so that you can build a portion of the portfolio using ETFs. And then at the end of the class, oh, by the way, Adeline need help to post the link again, right? And at the end of the class, well, the rest of grad turned out, Cayden, you don't have to tell us. At the end of the class, you'll receive a hard copy of our book. And of course, you also receive a Value Investing Simplified. Yeah. Okay, So the ROI, right, the guaranteed inverted commas ROI, $8 to charity is actually 688%. And for those people who are not our grad, please join our masterclass so that you get to learn more. And then during the masterclass, you ask me, I'll tell you about the vlog. Now I don't tell you. So remember, during masterclass, you learn how to generate 3 sources of passive income. Even if you know absolutely nothing about investing, you learn how to invest in minimal capital, which is $100. And last one, you'll create the CFOS. Make it say anti-climax. Okay, now I know most of you are grad, right? You feel quite buisong, piece of anti-climax, right? Now, Cayden, are you going to tell us whether can buy Foot Locker or not? Okay, hang on there. Don't get angry with me. Hang on there, Drum roll. Ready, drum roll. So, okay, okay, guys, for our grads, I will not tell you the answer tonight. But don't feel angry. Don't feel angry, But I will tell you another time. Okay, Yeah, I'll tell you another time, right? Now, for our grads only, let me share with you a good news. On the 22nd of March, I can't remember what day is that, right? But on the 22nd of March, we will post it inside a closed group. Thursday, We will email to all of you who are grad, right? On the 7:30 to 10 p.m., we are going to organize a session. We call it VIA's Heroes Review. Yeah, what is this? Wow, like always got new things. Now, this is not a VIA gathering. This is something interesting. Now, during this session, you don't have to pay a single cent, right? You'll be done live, Facebook Live, right? Inside our closed group. Which means that if you are not our grad, too bad, right? You cannot see, so you must attend our masterclass, right? Yeah. So you will learn you will learn some of the grammatical error, right? You will learn some of the common mistake in selling options. Yeah. And if you are inside a closed group, you will see one case where I think some naked puts were involved. So I will break down what could have been done better, right? And some of the features in TD and Metrate that you can take note of. So this one. And the second thing is how to manage a portfolio with a China stock. For example, Alibaba or Momo or whatever, you know. Yeah, or even Russian stocks. Yeah, recently I got one Russian stock that kena. I was telling myself, oh shit, when Russia invade Ukraine, I should have cut loss and sold the stock. But it's a bit too late already. So right now my stock kena, right? Yeah, so I'll share my own thoughts. What can you do with the China stocks? And then the most important thing, right, is we have a mystery guest. We have a mystery guest. There is one lady, right, who was our graduate for many years. Yeah, she got stuck with some China stocks and she made some mistakes. Yeah. So what I did was I asked her, right, to share her mistakes. Something like Fauzi, but in this case, more detail. And this will take place on the 22nd of March. But this is strictly for our graduates. And for those people who are not our graduates, it's also to let you know that this is how we support our graduates even after the 4 days value investing program. Yeah. So with this, I just need Adeline, right? Nicholas, what about those who are waiting to go for the VA course? Nicholas, steady. During the third day of the VA course, we'll put it inside the closed group. When we put inside the closed group, you will be able to see the video that's inside. So steady, So don't worry, right? Yeah, but of course, if you don't join the course, then too bad. Okay, I'm just kidding. Just don't get angry, So I'm going to end my session. I just need Adeline to post the 2 links again. Yeah. So we're not perfect. Sometimes we make mistakes, right? But I think we have a heart in helping grads because I also have the skin in the game. Whatever company sometimes buy, sometimes I also share. Share from an illustrative perspective, not as a recommendation, right? And the reason why we do what we do is simply we have a mission, and our mission is we care to make you a better investor. So right now it's a bit late, We intend to stop at 10, right? But right now it's 10:35. So I'd like to wish all our VA grads, including our non-grads who are watching this video, a great evening. Have a good rest, right? Have a good rest. And then for our grad, I'll see you on this 22nd of March. And for the non-grad, please attend our master class. I mean, we're not going to harm you or eat you, right? Yep. So learn something. If it's meaningful, it's okay. If it's not, then you still have the books, 688%. So you lose nothing. And then your 688% ROI is guaranteed. So with that, if you're a partner, right, please bring your friend also. With that, we're going to end our session. And I would like to thank Susie, Irfan, Adeline, right? There are 4-man power here, which is supporting all this. And I also like to self-thank. Self-thank, right? Okay, so remember, we are VIA. We care to make you a better investor. And I shall see you in our masterclass. Okay, so goodbye. Thank you. See you soon.